Good afternoon, Chair and members. My name is Godfrey Mugwemi, Senior Economic Policy Analyst, National Treasury.
Good afternoon, Chair and members. My name is Godfrey Sie, Director Communication, Treasury.
Good afternoon, Chair. My name is Georgia Basinengo from Kwal. From Kwal? Then you're in the wrong meeting. Today is a meeting with the National Treasury, so you may have to excuse us, please. So thank you. Masai Jafika. Good afternoon, PS. So as we are aware, this committee has carried extensive public participation across 15 counties, receiving all submissions. We have so much received. 100 and what? We have received over 100,000 submissions from Kenyans, both in by email and written submissions. And now we retreated from yesterday to do our report, and we hope that we'll be able to table our report on Tuesday next week, so that we're able to pass the budget hopefully before the end of the week. So there are several matters that came from public participation that we felt we needed to hear your thought process on them. I'll mention a few, and if there is any that I would have left out, I'll give a chance to honourable members to raise them, and then you respond to them. One, on the issue of taxation on funds, the members of the public appreciated that the new rates would be 5.5 percentage points lower. Because now if you take 25% import duty, 17% VAT, the excise, RDR and ADF. So our calculation is the current taxation gives 50%, 50.5%, but the new rates will give 50.5%, and the rates in the current law is giving around 55%. However, a question was asked on payment upon activation. And the question is that Kenyans were telling us when they go to the shop to buy a phone, they want to pay and go and use the phone. But now you're telling them that you buy the phone, you go with it, and then once you put a SIM card, you are required to pay tax at that particular point. Kenyans felt that's unnecessary tax burden, and they're not willing to do that. So we'd like to understand from you, what was the thought? What are you trying to cure with that proposal? And number two, how do you intend to collect? Is it now the taxpayer who will pay to KRA? And three, how will you determine the value of the fund at the point of payment? Because it has to be based on the value. That's one. Number two, the issue of payee. They felt that His Excellency the President had pronounced himself that those earning less than 30,000 no longer pay PAYE yuan, a promise that was also made by the Cabinet Secretary National Treasury, but that proposal is not on the bill. So they were requesting that we make that provision in our report. What's your view about that? That is on 30K and below. Still on pay as you earn. In the Finance Bill of 2023, we introduced two tax bands for high-income earners, the 32.5% and the 35%. So, especially Kenya Bankers Association were very keen on this, because they're saying it means that individual taxpayers are paying higher than corporates, because corporate taxes are 30%, whereas corporates are able to deduct the expenses, but this individual is not able to deduct the expenses for the income tax. And they feel that is discriminatory and should be addressed. And they're even saying that now, as a result, they're not able to contribute to black tax, because now their incomes has reduced. Point number three, the issue of affordable houses, there are exemptions that we had provided for a supply for affordable houses, but you want to take away that exemption. It seems inconsistent with your own policy on making affordable houses affordable. So on one side, you're saying we want to build affordable houses, but on the other hand, you are denying them the exceptions that you're giving them to making affordable houses affordable. Before I forget, the same thing on funds. The current proposal will disadvantage local manufacturers or local assemblers of funds because exemptions are only being granted to imported funds and not the ones that are locally manufactured. Kenya Association of Manufacturers were also opposed to the period of carrying forward of losses, where they were allowed to carry forward, I think, up to 5 years. You're reducing that to 3 years, and that is a key concern from manufacturers. The other one is on betting. The increase in taxation up to 20%. The betting was saying that to take now betting offshore, and they're saying the policies that we passed last year actually led to more collection. So they were saying, why are you now changing it now instead of waiting for it to at least work like that before you change it? Is there anything else I'm forgetting? On the issue of zero rates and exemption, pharmaceuticals were saying that it's going to make a medicine more expensive, and that goes against your policy on universal health coverage. The same thing was made on lithium batteries and electric vehicles. Electric vehicles and electric motorcycles and bicycles have really saved us during this time of surge in prices. The government has said you also want to go EV way. So again, why are you discouraging? Why are you taking off exemptions that we gave last year that's going to facilitate e-mobility? Let me give a chance to other members to raise the time I'd forgotten. Honorable Ruto.
I remember the issue of withholding the definition of royalties, which I've seen it. That's brought a lot of emotional engagement here. The implication on why they were expanding that definition on royalties. I think it's also good to remind them.
And maybe just to emphasize on that, the taxpayers felt that every time, I think there is a case of ABSA against the Kenya Revenue Authority, and they were feeling that every time KRA has lost a court case, they now rush to amend the law, and they feel that you're being too overreaching in terms of doing that, because yes. And on the same time, the definition of digital transactions, Safaricom felt that KRA would, when it's taken the way it is, they were saying the next thing KRA will do is to go increase taxation on M-Pesa transactions, and that is really the backbone of the economy. The bankers were also saying that tax on card payments would drive Kenyans into cash payments because it's going to make card transactions or banking transactions very expensive. Honorable Rico and Honorable Mboni.
Chair, mine is just an inquiry on deemed dividends on undeclared profits. Chair, companies have the policy on dividends. All companies. So if a company makes a declaration that on its own dividend policy, that they will be distributing 20% of profits after taxation. Now, the government now decides it has to go against that particular policy on declaration of dividends, or dividends to be paid to the shareholders. What informed Treasury to say 60% of retained profits to be 60% of it to be declared deemed dividends against probably the policy of the company. Secondly, on the issue of revenues accruing from these cards we've been talking about, the Visa cards and the MasterCards, what is the position or generally accepted on the generally accepted accounting principles or OECD treatment of revenue accruing from the merchandise? Because there are two streams of revenues there. And OECD has classified the two revenues differently. One as part of the income that has been reported in the P&L account. The other one can be taxed. That is the read I got from the OECD practice.
Thank you. You have an additional one, Honorable Ruto?
While we are looking at this issue of withholding tax on royalties, if you listen very well to submissions, especially by the financial institutions who are here, there are a lot of gaps that seem not to be connecting, because as it is right now, banks and institutions who are operating on money transfers are subjected to corporate tax and transfer pricing taxes. And the big question they left out is exactly what are the gaps the National Treasury have seen now to be existing on the current taxation framework as far as this particular practice is happening on these margins. What gaps are there? The other issue is...
Yes, just repeat to him.
Okay, thank you, Chair. I'm saying this intercharge, margin discount rate, and network fees are already taxed through corporate tax and transfer pricing. What gaps then does it exist for National Treasury to introduce the withholding aspect on this? And who is going to withhold this money? Because from this discussion, the beneficiaries on the charges are array of individuals or agencies that are benefiting from these discounts. Number two, what are the tools in place to ensure compliance? Should this committee heed the request by National Treasury, who will undertake compliance? The other issue is what are the impact on this cost, on the cost of this? Have you assessed? Because it looks like now it will be within the region, Kenya will be the first one to go this direction. And globally, there is no empirical analysis to show that another entity or agency or jurisdiction are undertaking this. And what are the mitigation? Should we introduce this? What we know generally in the business world, any tax we introduce, the impact cost on it is push to the consumers. So what are the mitigations that the practitioners will not levy this to the consumers? That's why those are a lot of questions that surrounds the issue of withholdings. Thank you, Chair.
Thank you. Anna Bomboni, then Abu Kaluma.
Chair, thank you. Thank you very much. Chair, on the issue of exercise be paid on mobile phone activation, actually this is a very critical issue because people are asking themselves, first of all, who is going to pay the excise of 25%? Two, how will KRA know that this phone has been activated? Is KRA going to have a software connected with the dealers or with the Safaricom? And how safe is data in terms of M-Pesa transaction? How safe is it if KRA can use it? Why am I saying this? Because if you look at the other clauses, there's a clause saying that KRA can assess and determine your tax obligation through third party. I think there's a clause on that. So is this third party? That means
They can use your M-Pesa transaction, Circle transactions, bank transactions. So how is that connected? I think that's very, very critical. Now we need some clearance. We need to be very clear on this. The issue of tax on betting, I think winnings, I think this one is the Gen Z. They are lead against this because they are saying this is part of their income. We have not, they point at us. We are not being able to to create employment for them. In Kilifi, one of them said that the members of parliament wamefungwa mudomo na wamekunjwa by the president. So we have no, we cannot help them. So how can we? That's a very big concern for them. The issue of suppliers to issue invoices. In fact, the concern here, and I think this is eTeam's invoice, the concern here is how will Mama Mboga do this? The suggestion was, why can't people be trained first before we embark on these invoices? The VAT on digital services, obviously that one, they're already seeing transaction charges for M-Pesa. They will go up. The other thing, exemptions on failure supplies from VAT, 60% on mitumba, and also sugarcane. I think these are very big concern to the communities, to the people we visited, and I think those are the issues which I picked. Yes, the issue of enhanced enforcement of KRA agencies notices. I think that's I've already talked about. I think that basically those are issues which I picked from the public administration, both here and in the counties.
Yes, Honorable Kaluma, Oyula, then Kaluma, then Honorable.
Chair, the other area which raised concern, and particularly among the youths, was the frequent change from zero rating to exempt, and from exempt to zero rating. Why can't Treasury be firm on one route? If it is zero rating, if it is exempt, just be firm so that they don't have to change every year. This year we have gone through zero rating, next year it is exempt.
I thank you, Chair. PS, on this issue of activation or payment of taxes upon activation, there is a big concern by the people that while at least they want to meet their tax obligations, they don't want their data exposed to KRA in terms of data protection breaches. So maybe you will share thoughts on how you want to go about it without breaching personal data or exposing them to KRA. Otherwise, it is an issue the committee has to firmly decide on. On affordable houses and the tax benefits, there is the use of this, the word direct and exclusive use. Goods for direct and exclusive use in affordable housing. And in terms of real mechanics, we are not hearing how that is going to practically work. How do you ensure that goods being imported or being purchased are for direct and exclusive use, so that we don't have people taking advantage of that opportunity to then, purchase those construction materials for other uses other than that? Because we may use direct and exclusive, but what are the mechanics, the truth around it? zero rate and exempt, we need the Treasury's philosophy around it. Because currently, things are just being thrown into either category without a clear policy in terms of what we are zero rating. If you hear the explanations, we should then be zero rating everything. Okay? And to me, we are subsidizing without an impact on the cost of goods and services to the people. And that makes some of us, like myself, think that we should remove that entire schedule on zero rates. We go exempt, let people pay their due taxes in terms of tax equity. So you'll share with us your philosophy on that, so that we don't have these facade processes, continuing where fishing nets, for instance, are exempt. Other goods are zero rated. We need a philosophy so that we can decide, going to the future, and whether whether zero rating actually benefits people. There is something that was being raised about the proposal on scrap metals, PS. There is a big worry that we go the direction being proposed, you'll open up public infrastructure to vandalism for scrap metal, purposes. Yeah, so let us hear from you also on that. On income tax, we are in an election year. It is bothering people, it is bothering me. Your CS went outside there and said people earning up to 30,000 will be relieved. The president has said it times without number. It is not anywhere in this proposal, and it is an election year. Yours may be technical, but ultimately we are going to meet people outside there. Can I have your proposals in terms of that can be handled? If we were to relieve people up to those earning up to 30,000, what is the deficit it is going to create? And what would be your thoughts around it? Because I can tell you this is going to be a big issue. You know where the burden of taxation is, currently. And it will be an issue to the president, it will be an issue to his team, it will be an issue even to us as members of the Finance Committee put together. Then there was the issue of enforcement notices under the tax procedures law. There is a proposed deletion whose effect would be that even when you have a legal process going on, in terms of appeals, you will have to comply, and enforcement notices, the stay that was there, just nearly automatic, is being deleted. It is a worry. We need to hear your deeper thoughts on that in terms of tax, efficiency. Yes. Lastly, what we are looking at as a committee is how we can help you broaden the base. We can make taxation measures efficient, and of course, without causing government revenue collection deficits. So things which can be balanced or things which are not inside here, let us have your proposals if they are even beyond that. But I think, Chair, from my perspective, those are very big concerns which require clarification to the committee, so that we come up with a taxation scheme or revenue raising measures which are fair. maybe to ask also, this thing about levies, I know it may not be here, they are in other laws. There is a time the court said that levies should be calculated based on the basic pay, not the gross. I don't know what is being implemented now or whether that decision was reversed. I thank you very much, Honorable Chair.
Thank you. Honorable Wile.
Chair, just to add on what I said on exempt and zero rating, there's a high concern on transportation of sugarcane. This has been on zero rating, exempt, so the farmers, particularly when we were in Vihiga, the farmers were very much worried about these frequent changes. And they'd want something that will make them be steady in their operations. And then another area was on invoicing. They said that bill proposes that all persons supplying goods and services will now be required to issue invoices. Some raised concern about Mama Mboga. How is Mama Mboga going to raise invoice or what? So it's an area that we also need to explain to us. Thank you.
Honorable Umi, Honorable Paul, then Honorable Muti.
Thank you, Chairman. My first question is on the finance bill, on clause 10, section 15. There's a new paragraph been inserted that talks about employees of the central bank. And when we met with the central bank, they had no idea where it came from. Maybe if I could read, it says the new paragraph, in the case of an employee, the amount of interest not exceeding 360,000 shillings deducted for the repayment of a loan advanced by the Central Bank of Kenya for the construction, purchase, or improvement of a house occupied by the employee. Maybe you could expound on how it arrived in the finance bill. My second question is on the Sovereign Wealth Fund. When we met with the mining ministry, they were against it that in terms of collections, that it should not go to KRA, because they said it's going to be very hard on licensing and compliance issues, because they have no idea on how it's done, and it's them who do the compliance. So the question we're asking is then, where is the point of convergence between the ministry and KRA? And they were totally in disagreement with it, which when you look at it, then it becomes very hard. When you just collect tax, you don't know how they've been faring. Have they been compliant when it comes to licensing and all that? So tell us the rationale behind moving it to KRA. Thank you.
Chair, just because it has come, I thought maybe sovereign will come later, but since it has come.
Yeah, but could you please because you had already spoken.
Yes.
Let's give a chance.
All right. Just on that sovereign, so that it doesn't come later. Mheshimiwa has actually asked, but probably to separate is that the concerned department are only concerned on their real primary work of ensuring they license and they undertake compliance. And in that process, during application for license, they're the one to provide license upon payment of fees relevant on licensing. But there is the other collections, royalties, and the others which the law prescribes a collector for that purpose. So they were asking themselves, now that we're shifting to sovereign wealth bill, where money will be collected and will be going there, what will happen to their primary function that they've been doing? Because the current proposal is silent, and I'm sure even the current law still gives them some challenge. It reduces their work because they have just been left to sit in the office. When they want to comply, they don't have tools or information to do their work. So you need to say something about that. Thank you.
Thank you, Mheshimiwa Paul.
Thank you, Chair. My concern was, I think Kaluma had executed it well about the agency notice, and my concern was that what happens to a taxpayer when he wins or she wins a case, yet you had already taken their money. And number two would be many of the stakeholders were having issues with tax predictability. I don't know what you have to say about this issue of predictability, because it gives stability in businesses. When you keep on changing every now and then, it really destabilizes them, and several were concerned. So what is your take on those two issues? Thank you.
Dr. Rimuti.
Thank you, Chair. Mine is on tax on betting winnings. The bill proposes to introduce 20% withholding tax. This issue came highly, especially when you were in Kiambu, that most of the betting is being done by the youth, and they felt that instead of introducing it, should go to reduce, because most of the upcoming businesses are from the youth. And also remember in Matate, the same issue came up. What do you think? Whether are we going to help the youth, the growth of the business or the incomes when we introduce the tax? Thank you.
Thank you very much. Quite a matter of questions. Maybe additional 4 on pre-populated returns. Taxpayers felt that most of the time KRA systems are down. I think there was even, when you're now trying to, in the new model where you're trying to change how taxpayers are doing returns, there were like 2 or 3 weeks where the systems were down. So if then that happens and then you pre-populate that data, then they felt that there would be so many errors. And then when we are also allowing that party data to be the one pre-populating the information, then you are taking away the right of the taxpayer, because the onus is on you to prove. But then now once, if you just populate the data not telling me where that data has come from, then the taxpayer is disadvantaged to even defend themselves before the Revenue Authority. Then on the filing of returns, they were asking, why reduce the period? Why is it necessary? Why is it really necessary to reduce that period? On Mitumba, Kenyan Association of Manufacturers were saying, if we are reducing taxation on Mitumba, that means we are allowing more of the imported second-hand clothes, whereas we are trying to grow our textiles sector here. So that's why they were opposed to this new taxation on Mitumba, because they felt that that would disadvantage the manufacturers. The issue of aircrafts and the association felt, okay, we're reasoning that if we make these parts standard rate, then because aircrafts are very are highly mobile, then it will take business from Wilson Airport back to South Africa and to Rwanda. And they're saying that the last time this happened, I think is 2021, that is what happened. And that's why now it had to be reintroduced. Lastly, the issue of tax refunds. In the Finance Act of 2024, we allowed the taxpayers to deduct their outstanding tax on future tax liabilities. They reported to us that that happened for a few months, but then KRA disabled the system and disallowed it. And they're feeling, if KRA owes me 1 billion shillings, why do I need to go and look for another 600 million shillings to pay KRA, whereas KRA owes me a whole billion shillings? What is the strategy in how do we fund these tax refunds? Because we're saying it's taking away a lot of business. And like the flower growers were saying, for example, If they got that, I think they were owed 600 million on tax refunds, and they're saying if we are paid that 600 million, they will invest back into the business. That will mean there's going to be increased employment. That means that they will even be able to pay you more. I think you may respond to those issues first. On KRA, the KRA amendment bill, there were recommendations by some taxpayers that maybe we should amend the KRA Act to provide, I think now they receive 1.5% of their collection, and raise that to make it at the minimum so that they are well funded for their operations, or we ring fence that fund for the tax refunds so they don't have to come to National Treasury for allocation for tax refunds. Over to you.
Okay, thank you very much, Chair and honorable members. I need guidance. It means I just go straight to answering the questions rather than going through the presentation by my cabinet secretary. Right?
You can go to the presentation of the Chair, in my view, answer some of the questions.
No. But then if you...
I could just do an introduction.
Just take us through those are the concerns we have.
Okay.
Respond to those concerns first.
Okay. In doing that, maybe I'll just spend a few minutes as part of my introduction. So, as the Minister presented yesterday, the budget you saw that we presented also informed the way we came up with this bill, because we developed this bill against a backdrop of very tight fiscal space, a situation where we have rising expenditures. In fact, what we presented as 4.82 is what we could accommodate. Otherwise, ministries needed another 914 billion, almost $1 trillion, which is not funded. At the same time, we see limited scope for raising more taxes, given the reaction of Kenyans and based on also public participation. So we adopted a strategy of focusing on enhancing revenue collection through improved tax administration, and where we broaden the tax, bring those who are not in the tax bracket to come in without necessarily raising tax rates. And it means also strengthening compliance. And this is very much in line with our national tax policy and our medium-term revenue strategy. Both documents prioritize efficiency, equity, and simplification of our tax system. We have laid emphasis on simplifying tax laws and eliminating ambiguities. These ambiguities create room for tax avoidance and even disputes. So we have tried to clean up in what we have presented to you. But the key reforms that we have in this is also on the area of taxing of trust. How do we improve taxing of trust or taxation of trust? There are many references or definitions which are in various statutes that we need to just clean up. And we also need to align our domestic tax provisions with international standards. I think I heard somebody talk about OECD. And so we are trying to align so that we are also, given we are in an open global economy, we need our tax system also to respond to that. We have also taken steps to take into account the structural measures which have happened in our economy, especially in streamlining taxation of virtual assets. And there are also cases where we have non-residents who are not paying their taxes, and we have tried to improve, especially on rent. Then the issue of dividends, we want to bring in clear rules on dividend distribution and offshore transactions to cap what is called profit shifting and base erosion. Another area we have looked at is tax expenditure. If you look at 2024, our tax expenditure was almost 400 billion, about 3% of GDP. Last year it came down a bit, but we still see need to rationalize that tax, to minimize tax expenditure by looking at this zero rating and exempt. So I'll be answering some of the questions. But the whole idea is around limiting or reducing tax expenditure. This bill, therefore, is looking at strengthening tax administration and enforcement. And we have introduced a general anti-avoidance rule. We have a crypto asset reporting framework, and we have enhanced penalties for non-compliance. And we have also brought in reforms which are aimed to harmonize tax treatment across sectors, promote fairness, and align Kenya's tax system with regional and global standards. So I will now go to specifics, and I will be supported by Mwenda here and other experts here, including RISPA. I just need also, just before I proceed, to say that we have done yields, revenue yields, for the various tax proposals. So on income tax, we are only going to raise 11.1 billion. For VAT, we are targeting 21.5 billion. For excise duty, 26.28 billion. Under tax procedures, we expect to raise 36.35 billion. Under miscellaneous fees and levies, we expect to raise 1.26 billion. And from the ECMA, the East Africa Customs Management Act, we expect to raise about 2.4 billion. So in total, our revenue estimates based on this finance bill is 98.94 billion. Having said that, I will now focus. I think most of the questions could have been repeated. So maybe first, I will answer on the issue of pay as you earn. The President's pronounced himself to give relief to because this came at a time when we just got this crisis from the Middle East, and we see pressure on the domestic economy. We had to revise the VAT rates from 16 to 8% relating to petroleum. That led to loss of revenue. And then some of the money we had under PDL, we have used to also cushion the economy. And therefore, if we implement the what we call personal income tax. And KRA have estimated that potentially we could raise up to 600 billion. But again, they've been seeking support. We have already given them about 17 billion, and they are now beginning to do a number of reforms. They require a bit of time to demonstrate that they can bring in that PIT. If that PIT comes, we definitely need to relieve the others, because the burden of taxation now in Kenya is by us who are salaried, because we are the main ones seen, and we are bearing the tax burden. So we need to bring the others on board, and then now relieve the rest. So it's an issue of timing. That is why we pleaded, and I hope this could be, it's not something we want to be out. We wanted just to tell the committee here that it's an issue of timing. We could bring it by way of an amendment, tax amendment law, later this year, perhaps maybe in October, November. But we also need to see what KRA is doing. You have also seen the changes we have made at KRA and in its leadership to make sure it turns around to make sure we get offsetting revenue measures. Otherwise, we run the risk also of meeting other obligations. For instance, we have a fiscal framework already. We're expecting funding for instance, from World Bank, and it's based on commitments we have made, the revenue that we have already indicated, even our budget that is before Parliament, and the fiscal consolidation path that we have followed. If we also send the wrong signal, like now the finance bill comes out with minus 39 billion. That means the 89, that is it 98, that this 98 minus 39, it means we will be having a finance bill that will be almost just giving us 50 billion. That will be a big gap on financing the next budget. So this is really an issue of timing, and we had, as a team, really felt the right time to implement. A lot of our staff are also beneficiaries of this, but we have to look at the broader picture in terms of the economy. So we thought, and we at least our minister and the president agreed that we can have this finance bill go as is. Then we come back now with a separate bill, and we have done it before. I think on the issue of funds, the main motivation has been the fact that we have funds getting into our market through porous borders, and we don't get the proper revenue. But there are also multiple tax measures. Customs, when you're importing, then you have also VAT, then you have excise of 10%. When you look at it all, it's about 55, almost 55.3%. We felt this could, based on our expert view, if we lumped all those together and pay under excise duty of 25% and make sure this is only done upon activation, then we are certain that there is no one who will be having a phone or in our market that is that will not have that taxes will not have been received from the transaction based on that phone, because they must be activated. We felt that is a surer way to enable KRA to get those who are not cheating. I think that's the motivation. I think my team here can also add their view. On affordable housing.
So on the phone, but don't you think that then taking that burden off? Think about my grandmother in the village. She has bought a phone from a shopping mall. She wants to use the phone. But I'm telling her now, you buy a phone, you put a SIM card, you use. So you're telling her now to now log into KRA to pay. What about some that don't even have PIN numbers, for example?
Yeah, okay. I will come back to it on that quickly, but maybe when I think, yes.
If, for example, I go out there, because thank you, in fact, you are giving us some allowance here, up to $2,000, I can import something. If I go out, I can come with something of $2,000, which is around 250, 260, and I buy a phone there. When I come here, I activate it. Right? I've come with it, not from a dealer. Activate it. How am I going to pay that 25%?
Could you confirm the figures that we are trying to raise on the finance bill? Because you have said the yield is supposed to be 98.94 billion, but we check the document that were presented yesterday at the House by the Cabinet Secretary, the figure is 120 billion. So which is the correct figure?
And Chair, point of order, I just wanted also clarity. We are not all accountants. What do you mean by PIT?
It's PYE, pay as you earn.
While he was explaining the pay as you earn, he talked about
through the chair.
Hold on. Respond to the question first, Daktari, from Peace.
On phones.
Now, what did you ask, Honorable Paul?
Yeah, it's sorted because I was asking for PIT, not PAYE, and he has responded that personal income tax. Thank you.
Yes.
Through the chair, did you consider the consumers of this item because most of the people are local in the villages where they are acquainted on the use of this. If you could say that.
Yes, the PS said that someone else would respond broadly on that. So could you respond to the other matters, then now you can give the other officers. PS, I think you wanted to continue with the answer.
Let him just finish.
Okay.
PS, thank you. Chair, on the issue of mobile phones, the intention is not to transfer that burden to the end buyer. The intention is that the process of administration of this will require that there is a database of IMEI numbers of the phones, which are really available. And therefore, when the vendors are selling those phones, they will have to ensure that each of those phones tax has been paid for before it is activated. So that process, because everything could not be put in the law, there will be some regulations that will clarify how that process will work. And both the Kenya Revenue Authority and the Communication Authority will exchange this information. So the IMEI number, and it's not new to Kenya, Chair. It is the best practice, and it's been adopted in other countries. And it has another benefit, Chair. If you look at under the relating to security, Chair, when the phone is being activated, and you are sure that that registered phone, the tax is paid, you also have good controls on the phones that are being used in Kenya. So there will be an engagement between the Communication Authority and the Kenya Revenue Authority to ensure that they have a system that has been put in place through which they can then point to the IMEI number. And it's for both the local manufacturers and the importers, the imported phones. Chair.
So on this, when do you anticipate that these regulations, okay, do we have regulations yet?
And Chair?
Not yet, Chair, but that's a process that it can't begin until it can't be concluded, but those ideas are there. As I've said, it is not new. It's new in Kenya, but it's been done elsewhere, and we will follow the best practice.
Elsewhere, yeah,
but hold on, Abu Kaluma. But then, if we don't have regulations yet, yes. And I had Waziri say on the Twitter space he did in the course of the week that those regulations will be ready by December.
Yes.
But the effective date for this law is 1st of July. So if the law comes into effect on 1st of July and the regulations come out in December, then you're going to lose, Kenya is going to lose revenue of these funds for these 6 months. Number two, I'm a phone dealer across East Africa. So I have 1,000 phones in my shop. I get an order for 200 in Tanzania and 500 in Uganda. I send. That means that we will lose revenue on those phones. But had those phones be paid for duty at the point of entry, we would benefit from that tax. So I'm yet to be convinced how this is simple and how it's going to give more yield. I am convinced that actually this proposal will lead to less yields in terms of this tax on phones. Honorable Ruto, then Honorable Kaluma, then Honorable Bon.
Chair, even before we go to that stage, because already from your question it looks like we Treasury as something that they want to communicate, but it looks like it is not coming out well. PS. Communication Authority were here, and when we were engaging them, Chair, if you remember, the definition of the word activation alone is totally confusing, because even them, they were not in a position to even put in the words that the Treasury are putting, that the intention of Treasury is trying to put more tightened controls on the use of funds. So even the agencies you're mentioning, they were unable to put it the way you are putting here. So to show either it is a knowledge within Treasury alone and not even the other agencies. I don't know whether you engage them through the sector working groups while you're establishing this. But I have another question. Who is undertaking the process of activation? Because we have traders who import in bulk. I'm sure, let's assume they are importing through Eldoret Airport, International Airport, and then KRA are there to receive. In packages, the way they have been packaged, maybe in bulk of 200, 100 pieces, or the way they are packaged. And then there is the user. I myself have acquired a phone, and I want to insert a SIM card. To us, laymanly, that is what we get to be meant by the word activation. That I put my SIM card, and then my details is connected through the service provider for security resources for Kenya Revenue. Who pays? Where is the tax incident in this process? That's number one. Number two, we've been fighting the issue of data protection, because it's not the first time that we've received proposals on requirements of a law to facilitate Kenya Revenue to access some further information, maybe in the quest of undertaking compliance. And it has been fought with a lot of resistance. Someone here, or an agency who was here during stakeholder engagement, was so particular and said, how then do we demystify this, that KRA is coming through the back door to again get to that ability to access information that could be of private in nature, could be of business secrets in nature. How do we delink that one? Because those are two major questions. Tax incident, who pays it? If today Mbonia said he traveled, he came with a phone, or my relative traveling from abroad brings me a gift, or brings my mother a gift. When my mother puts the SIM card activation, where is the tax incident? Thank you.
Yes, and perhaps just try to clarify that matter. And see, it's us to make the decision. So I think we let them explain, then we'll be left to make a decision, because the decision is ours. Yes, Honorable Kaluma.
Yeah, Chair, let me just begin to the CS where you have left. We requested you clarify specific issues because we recognize our power to make decisions around them. And we are seeking clarification so that we make good decisions. I know you are getting what I mean. Maybe let me say it the other way. If it is not clear, our decision will be adverse to the proposal. Protection concern that is being raised, let it be clarified. But also kindly take the point that the chair made about the entry into force of this law and the regulations being expected to be on our desk or promulgated in December. And remember, this is a substantive law being expected to come into operation. Is it 1st of July? Yeah, so they are not subject to regulations. Instead, regulations are subject. What you are saying as simplistically is that you will be rationalizing and putting into effect these provisions before even the regulations are not there, after the regulations are not here. Okay. Be clear on those two points.
Yes.
Try to clarify that moment, and then we make progress on that.
Chair, on the effectiveness date of that particular proposal, our proposal is 1st January 2027. And Chair, on the issue of whether on the issue of the IMEI numbers, Chair, the proposal is that there will be a database prepared, and the importers will have to make sure that for each IMEI, it is the point of tax is that still the importer. And the importer has to make sure that that particular phone, which has a specific reference, tax is paid for that. And therefore, the buyer of the phone has to ensure that that phone is fully compliant with the tax, and there will be an authority, which is Kenya Revenue Authority, that will maintain that.
How will that happen? Somebody in a village has bought a phone from the shop. How will that person who has bought the phone ensure that the phone is compliant?
Chairman, there will be, just because there will be a regulator, you will have to make sure between the Communication Authority and the Kenya Revenue Authority, those are the issues that will be clarified in regulation, and that responsibility will be assigned to one authority.
So, Chair, I'm not confused.
That is enough. Let's proceed to the other matters.
Chair, he's even confused. Because Chair, what he's saying that the tax will be paid at the point of entry.
Yes.
I think that's what you're saying.
Yes.
But now the bill talks about at the point of activation. So, I mean, which is which? Because you see my problem is, and you studied very well, when you say that there are so many funds which are entering the country, right, without even being recorded. That means the importer, if I'm importing like 2,000 funds, I have to register. I mean, these funds have unique numbers. I have to register those numbers so that when it is activated, KRA knows this particular fund has been activated, and therefore the tax need to be paid on it. So at what point are we paying tax?
Chair. Members, I want to persuade you. I think the National Treasury has tried the best to explain on this. The decision lies on the committee.
Okay.
Chairman,
so let's make progress on the other matters, because there are quite a number of matters that we raised.
Chairman, can I clarify? Because on the basis of the question by Honorable Boni, I think the original idea, we have had, Chair, conversation with the operators in this sector. Specifically, we've had a conversation with Safaricom, and they also do believe that these can be implemented in a manner that we are now suggesting. But we also benefited from their comments, Chair. So we are proposing, Chair, that that text in the law be changed, because we know it can work. But you know, Chair, we must be honest, it's a new area.
So how do you want to change it?
We want to change
it. And be
Chair.
worried when the Chair says members will decide. How do you want to change?
Chair, we want the point of collection, which is the one that Honorable Mheshimiwa mentioned, would be still the importer. We are not changing now. We've gone back to, we had initially thought it could be done through the point where, which is CA's role of activation. But now we are saying the point of reference is still the importer. But Chair, there is evidence that a number of these funds are not paying for tax. And that's where, Chair, I do think there will be a benefit in terms of collection by reducing leakages in this area. And number two, having a better control. But our proposal, Chair, is we amend the text to provide that this tax be paid at the point of import and not at the point of...
Yes, let's make progress. But even if you change the text to at the point of import, these guys who are importing these funds will still not pay, because they are still not paying because it is... The reason why I agree with you, like we were discussing this with members, the cost of, say, an iPhone 17 should be the same in the whole, should be merely almost be the same, whether you buy it at Galleria or Sarit, because the margins are known. But you find the prices vary to as much as 100,000 shillings, which means that those phones tax are not paid. So we agree a lot of phones in the market have not been paid for tax. But I don't think but maybe when we then you may submit to us the text of how you want that done, and then we can reevaluate it then. Let's make progress on the other matters.
Yeah, I will give to RISPA to clarify something.
I hope not on funds.
It was actually on that one, Chair, if you allow. Thank you, Chair. Thank you, PS. So I think maybe, Chair, you've actually progressed to that conversation, and I think we all agree that what we are trying to address the mischief is all the funds coming in that are unpaid for tax, one, and also there's a security issue. So when the text was drafted, the idea was you and I will pay once you, and activation was actually what Mheshimiwa had said, use. But then having engaged the stakeholders, we realized one of the things that it would mean that carry, in trying to ensure compliance, they will be chasing millions of people. And it was just not practical. And so we went back to the drawing board. And what was coming out was there are countries that have tried and tested this. I understand Nepal, Sri Lanka, and a few other countries that have tested this. And what have they done? At the point of importation, anyone responsible for bringing in should ensure, because IMEI is a single identifier of a phone, yeah? And that is what is recognized for you to be able to even to get the network. You can actually tell which phone is using what. So the idea is when the phone is coming in, or if it is manufactured, then have these IMEIs in a database. Responsible party, CA. When they're on the database, what that means is that IMEI number for that particular phone has been whitelisted. Whitelisting means then it can be used in Kenya and it can be put on whatever network. Now, where is the catch in terms of the tax point? So tax point will be at the point it's coming in by the time you're loading it into the database, or when it has been manufactured, it is going onto the database. So as long as it is a recognized IMEI, at that point, that will be the tax point. Now, in the event someone comes in with their own phone, meaning it has not been registered, the idea, having discussed with the stakeholders, is have a window that says whether 3 months or 6 months. Because your IMEI is not whitelisted as earlier explained, it means a text or whatever will come to you prompting you and telling you your phone is not compliant. That window, and that will be clarified in the regulations, that window should also cover tourists, people coming on short-term visit, because they are not expected to pay locally. So those are the mechanics that we want to get into to clarify further in the regulations. Thank you, Chair.
Okay, let's make progress on the other matter.
Okay, so the other issues on the issue on affordable housing. And this is an issue that we are trying to address, because I think when you, I think the issue is on if you buy cement and you say it's for express use in the housing sector, but that same cement you cannot distinguish, and you find that instead of going to where its affordable housing is, it's going elsewhere. And then we have lost it. And this is the evidence we have received, that it seems there's abuse. And so instead of providing an incentive to support the housing sector, and yet it's being abused, it's rather we remove it. And I think this is the motivation for.
Yeah, but the only thing then, it is an inconsistency, because on another clause, we are also providing for exemption for materials for PPP. So the logic then should be the same. So even the PPP projects will take the cement and will use it for anyway, proceed with the other questions.
Okay, and the other issue is on the issue of zero rating and exempt. I spoke earlier about tax expenditure.
But I don't allow me to make understanding through PS. Once we exempt these materials to PPP, I mean put together PPP and affordable housing, and we know the policy on the side of affordable housing during transfer of ownership or sale of finished products. They have been clustered. Maybe affordable housing, single 1 bedroom this much, 3 bedroom this much, 2 bedroom this much. When you absorb this VAT on it, to meet means the cost of materials will go up. Now, how are you going to cushion the margin for the developer since the end product is known that the price has been fixed and the buyer knows my one bedroom will cost this much, my, they call what, the bed sitter or what, will cost me this much. How are you merging the two? Because again, if it was zero rate, maybe treatment would have been different, but what you're saying is reasonable, that it is possible to have affordable housing here, the private housing coming together using the same materials or the same treatment. How are you going to balance that? Would this affect now the cost of selling the house outside there?
These are valid questions, because when you do a policy shift, and you know, like currently the law is allowing for that benefit for those who are in the affordable housing sector, definitely this is going to impact on pricing. But it is a matter that we have to discuss with the sector and see how to resolve that. But we have to weigh the benefits of having it and not having it, because it is, if it is not giving us a benefit for which it was designed, then what is the point of proceeding? Even on this matter for PPP, if you look at the previous, the expressway, the government made a commitment to settle the tax due. We call it, what is the right term? We agreed, it's like abandoning. We said we will tax abandonment, we will pay for it. But there was no legal framework. So it becomes very difficult for the minister to effect that, because we are being told pay, but under what framework? This is why we felt perhaps it's good to be clearer and say PPP projects. And as long as we have mechanisms to make sure they're expressly used only in PPP projects, then that's okay, because we have seen also those who want to bring their private money, especially in this issue of building the road sector, they would like to get some relief, at least on matters tax. So if they have to put their personal money or private money, then they need this incentive. And that is why we felt we should bring it before you, so that we have, especially in the context of this expressway, I mean this Mau Summit all the way to Malaba, we needed to give that commitment. And we have already given that indication that we want to proceed, but we want Parliament to make sure that the legal framework allows us to proceed. So I will allow my colleagues to answer the other questions. Maybe Mwenda?
No, before he does that, you are going to tax expenditures, isn't it?
Oh, yeah.
Which is very tight.
So on tax expenditure, if you look at national tax policy, we want to limit zero rating only to the export sector, to exports. That's the desire, because doing it for goods which are treated in the domestic economy is problematic. And we don't see even the cost being passed to the consumer. The manufacturer will seek for this, but they will retain instead of passing to the consumer. In fact, if it was not for the sensitivity of matters, you know, like bread, for instance, we would like even bread to be zero rated. And find a mechanism is retaining taxes at KRA. To the extent possible, we can minimize. So where we can exempt, we move away from zero rating to exempt, then there is no obligation for a refund. So if we minimize only this to, say, the export sector, for zero rating, the better. But it will take time. And you know, there are many years of each sector getting incentives. And that's why somebody asked why we keep changing. Because we change, then next year the sector comes, makes a lot of lobbying, and then it ends up maybe for us agreeing also to reverse. And I think this is not what we want in a national tax policy. Policy that we have for our tax regime must be stability in the tax system. You don't want an investor that comes and then next year they don't know what rate they will pay. So we are really making progress, and we think that in the short, before so long, we will have predictability in up to 5 years before we change, and that helps the sector. But I don't know whether you have anything to add there on this.
I think PS is exactly the way you've said. I think the point I would like to add is two things, Chair. One is that whereas there is also talk that this is supposed to make the prices of the goods and services that are targeted cheaper, we've not seen that translating, even for the bread. And the other problem, Chair, is that this way of supporting citizens is not well targeted, because you end up conferring a benefit to people who can pay. I think it's best to have an honest conversation as a country, and remember when is we believe it has become an industry. Some of the firms that are claiming these refunds have a fully fledged
It is in Kafu's interest to accept these cuts. Why? Because they also help them push volumes. Why am I saying this? And I'm just trying to paint a context so as to lead to that. Because if you go to a supermarket holding 1,000 shillings, at the counter, we've seen people do that you check as the amount is building up. When it gets to 1,000, you say, Rudisha hizo. But with a card, you're likely to swipe and go. So whereas you have paid 1,000 shillings, and you've taken your goods worth 1,000 shillings, Carrefour will not keep their 1,000. Part of it will go to the card owners. Yeah, so Carrefour might take probably 950 or 900, whatever the value they've agreed. And on this other side, the interchange is, these are different banks with different cards. Equity, KCB, Stanchart, name them. When you're going to the point of sale, even carrying a Stanchart card, it means, and if Carrefour is on equity, using the point of sale for equity, it means money is moving from Stanchart to equity. Someone else will come with KCB, it means money is moving from KCB to equity. So there's this movement of money every day. At the end of it all, during in the evening, I think it's about 6 p.m., there's what they call settlement. So Visa, if I use Visa as an example, will look and say how much is owed to equity, how much is owed to KCB, because there's the crisscross. Now there, for the banks to use this platform, then they pay the interchange fee. So what are we trying to do here? To say that in expanding the tax base, everyone earning an income, then they should pay. So what we are aware, and I think on the floor, one of the Mheshimiwa said that it was raised by KBA, what we are aware is that the banks have entered into contracts with these card companies, let me call them card companies. And the card companies are saying, for me, if my amount is 300, pay me 300. Taxes, you bear the taxes. And we actually think that's probably where the issue is. But we're saying there's this money going to these card companies. It is being derived or accrued in Kenya. Why then can't they pay some share, a share of what is accruing from Kenya? So that's really is the logic behind this, that where everyone else is paying because of income derived or accrued in Kenya, then if these others are also deriving or accruing income in Kenya, they can also pay their fair share. So that's really it in terms of this interchange fees and the merchant fees, Chair.
Through Chair, is it happening in any other jurisdiction?
Yes, it is.
And the cost of it, if the service provider decide to push back that cost element brought in by the taxes on it, how will the consumer, how will the card holder here, a Kenyan, a taxpayer in Kenya, be protected? Number two, how do you discuss that in the context of double taxation? Is the service provider totally different from the profits made by the companies transacting in Kenya because they're subject to corporate tax, or transfer pricing taxes that originate on repatriations? How do you discuss that?
Thank you, Chair. So on the double tax agreement, the double taxation, sorry, this is income in the card companies, and you'll find that the card companies, more often than not, their money will be offshore. So even in terms of repatriation, so this money, whatever they are earning, you're paying, you could be paying because it's in a bank, you could be paying and the money is moving offshore. So you cannot say, we are not looking at it in that way that they are paying locally and they are paying elsewhere. Now, for the protection of the taxpayer, indeed, that is something we have thought through. But from a tax perspective, the target to pay tax, the person we're bringing into the bracket is the card company. Now, we appreciate that there could be a likely risk of that tax being passed to the taxpayer. But then what that then does is that it then goes back to the contract. Because I think when I started, I said, what we have picked along the way in engaging the stakeholders is that the banks are concerned that the contract between them and the card companies is
for lack of a better word, sealed for now. What we would envisage is going back to the records to say, we the payer, in that case the bank being the payer, because the payer is just withholding. And the person to bear the tax is the card company. But what we have noticed, and Chair, this is not unique even to the card companies, we've seen cases where if an entity offshore is getting into a contract with a local entity, they would always try to seal such that their revenue belongs to them intact. So you bear the cost of tax, but then the revenue belongs to us. So the two ways that could happen is one, the top cost to be passed to the card company, or the cost then to be borne by the payer, and in this case, the banks. Thank you, Chair.
Can you go
move to the next one?
Dividend?
The dividends question, that's Section 24 of the Income Tax Act, Chair. Now, as the law is now, there are many measures to try and ensure that maybe looking at it differently, like companies holding as opposed to distributing dividends. So right now, there's a provision that talks to companies distributing dividends. But, so the law is there. The only thing that is not there is a threshold. And in the absence of clarity in law, it means the commissioner can show up and say, why didn't you distribute 100%? So what the new law is doing is to say, instead of distributing 100%, we are putting a threshold of 60. But as the law is now, the question would be, and if KRA showed up for an audit, the question would be, why haven't you distributed dividends over the last 3, 4? Why are you not distributing dividends? So is there something that we are not seeing? Is there a reason why are you trying not to distribute so that you don't pay withholding tax? You see, there is no black or white answer to that. So to provide clarity in the law, then we're providing a threshold, and with clarity in law, then it makes it easier for both the payer, KRA, and the matter is black and white that it is either 60 or it is 40, but at least there is a threshold being introduced. But as it is, Chair, the law exists. The next one. Chair, the next one. So as
you think about the next one, on this issue of card payment, I want us to read what is provided for in the law verbatim. And this is page 954 of the bill, which is clause 2, Roman 7. A proprietary digital platform, payment net, and so what you're changing is on definition, for example, of income tax. So a proprietary digital platform, payment network, payment card scheme, payment processing system, switching system, clearing system, or settlement system, including access, participation or usage rights in such system through a card, whether the consideration is periodic or transactional based, and whether or not the payment is cleared as a service fee, transaction fee, network fee, assessment fee, processing fee, or similar charge. So if you check the word of a proprietary digital platform, then isn't M-Pesa a digital platform? It is a digital platform, right? And so if you read that appropriate digital platform, so M-Pesa is a digital platform. So then you come to what does M-Pesa platform charge? They charge a transaction fee and service fee. So in that case, if this is read like this, then would you now go and charge M-Pesa?
Thank you, Chair. On that one, as is, even if you go further, yes, on the payment processing system, indeed, Safaricom uses a platform. And when this was published, we have subsequently had conversations with the, let me call them telecoms, yeah, for these purposes, because what this one, and even that other one of payment service providers, the VAT question, and I think it was also asked here, the intention is to collect on providers of ICT-based platform services. What do I mean by that? And Chair will allow me to combine this one and the one that had been asked of the payment service providers and exclusion from the exemption of the financial services. So both of them sort of read alike on the payment services in digital, because for Safaricom, allow me to use that as an example, when we had a conversation with them, they said they actually own the platform. So what they do is that in transferring money from my M-Pesa to the bank or vice versa, or one person to another, Safaricom, it's sort of like all-inclusive. They're not using a third party. They don't have a part. So if I'm transferring money from A to B, myself to yourself, Chair, they're not coming in as an intermediary because they have a platform that enables that transfer of A to B. Different from, if I was to draw comparisons, there are people we call the aggregators, or they have their own ICT platforms. Then they would come in between my account and yours. So they will do that processing, and their work, or rather their service, or the product they are giving is an ICT platform. So that's what we're trying to differentiate, that unlike Safaricom, who owns the platform and they're doing it end to end, there are those people who come and plug and facilitate the transfer of money from A to B, and that is how they earn their revenue.
An example would be like PayPal?
Yes, Chair.
Okay.
Yeah, we call them aggregators.
But in agreement that in the text as it is, if it were to be there is an intention and there is a text. So we agree that the text as it is would mean that KRA could charge this tax on M-Pesa transactions.
Chair, we agree. We need to amend the text.
All right, proceed.
So are you going to give us your amendment proposal, or you are leaving this to us?
No, we will give.
We'll do it.
No. If you have a way you want it to be put for our consideration, Chair, you could direct them to do.
Honorable Kaluma, you know you are new. So what usually happens is between now and Tuesday, there will be a lot of communication. Let me call them communication, so that we make sure we capture so that the intention is captured in the text, because there is the intention and there is the text. Proceed.
So maybe we can go to, I think, SCAP method.
Yeah.
But also there's betting. Let's go with betting and then, sorry.
Is it a further answer to that? Is it different?
No, it's something that I asked about deemed dividends on undeclared.
They are still responding to the questions.
Why not 30%? Why 60? What is the baseline?
And by that, by the way, thank you for raising that on Abuariko. The Companies Act put fiduciary duty on directors on how to distribute dividends. That is in the Companies Act. On this other side now, you're saying in the Income Tax Act, they must distribute, your proposal is 60%. So the question is, as the directors of a company who are already bound by the Companies Act, so which law then will they be following? Because it will mean that if they distribute that 60%, it may not be prudent and it might go against their fiduciary duty as directors, as directed in the Companies Act. So then there seems now to be a contradiction between now the Companies Act and the income tax in terms of that distribution of deemed income.
I think we can answer.
There is policy on dividend by companies. Yeah.
So if directors meet and pass a resolution on how to distribute the dividend, then there is nothing wrong with that. But if a company does not, and in the assessment of KRA it finds out that it should have, but it didn't, then this threshold falls. That's my understanding.
Yes, but the only difference is that, then the commissioner, how does the text read by the way? Page 959. 959. Page 959 of the bill, clause 24, section 24, the income tax is amended in subsection 1 by deleting the words, that part of the income bearing before the words, he may direct that, and up to at least 60%.
And Chair, we also want to remove the discretion that the commissioner has. The commissioner can choose 10 or 90. We want to limit the discretion by bringing in a threshold.
And you recommend the threshold to be
60, at least 40. You have the opportunity as directors. You meet, you distribute. If you do it, this will not apply. But should you not do it and the commissioner comes to find out that you did not, then this applies.
Chair, in the text that you are reading, it's not less than 60%. So the commissioner has a window between 60 and 100%.
But that may complicate we may have to look at the dividend policy and now the Companies Act, and so that it's not contradicted. And let's proceed.
Our expert here, he wants to say something. Let him say.
Thank you, PS. Through the PS, with regards to that clause on deeming dividends, currently, whatever the case, if you don't distribute, KRA will come to you and will deem. Because it's in the law, if you have not distributed, KRA comes and deems a certain proportion of your profit as dividends, and then it's subject to tax. What the provision is trying to do is removing that arbitrary decision of the commissioner, which causes inefficiencies in tax system. Because for a certain sector, the commissioner may go to one firm and deem 40%, but to another firm may deem 70%. To another firm, it may deem 90%. To another, but they are all in the same sector and they are all operating under the same nature. So with that, it has led to multiple tax disputes between the firms and the commissioner. So what we are trying to do is we are curing that challenge where the commissioner may favor some firms and maybe punish other firms by giving a threshold. So we are limiting that discretionary nature of the commissioner, which will make the tax system more efficient and more predictable.
Apart from one problem.
Yes.
You are still giving them the discretion between 60 and 100. So what are you still? They can punish one at 60, at 100, and favor another one at 60.
Chair, but by reducing that range of discretion, it makes the system more predictable. Because you see, moving from 0 to 100, there are higher chances of, or there is more incentive for a firm to try and guide the discretion of the commissioner, and that may lead to inefficiencies in the tax system. But by reducing that threshold to 60 to 100, based on reasonable nature, because they cannot just deem it at 100% if the taxpayer proves that they have retained some surpluses for additional investments. So the range being lowered improves efficiency.
Through the chair,
yes,
the range between 60 and 100 is quite wide. Why don't you be specific on a particular percentage?
Yes, that's okay. But now that is why you are here. That is now a decision. Yes, Dr. Rico?
Chair, I think the Companies Act is very clear. And the rights of the shareholders. The right of the shareholders is to maximize the profit. if the company maximizes the profit, it will mean they will either decide, they have given authority to directors to make a decision as to pay dividends or reinvest the retained earnings of that particular company. So I'm talking about infringing the rights of the shareholders. It's upon the shareholders to make a decision as to whether to retain the profits for reinvestment purposes or to redistribute the profits. And this normally depends on the types of the shareholders. Many shareholders, the healthy shareholders, will prefer reinvesting the gains or the profits. But these other shareholders, like Mama Boga, these other low class, they will prefer earning dividends.
Is the member in order to call Mama Boga low class? You cannot call them. Just say, just small business people. Don't call them low income.
Low income earners. So basically, it's upon the company dividend policy, because each company has a dividend policy. There's no company that doesn't have a dividend policy. Probably is PS, you can also borrow from OECD practice, and especially on the state-owned enterprises. If you read the text of OECD on state-owned enterprises, they have put 50%. And they are very precise, this 50%. So for your case, because you want to put some limitations, start somewhere. Don't consider yourself at the go somewhere. But it's a principle of this committee. I think the point Mheshimiwa is bringing out is that and then we need to balance between expanding the economy and taxation. Because if my small company, if I start a company, my goal is to expand the company. Therefore, my aim is to reinvest the dividends. So now you are coming telling me this is what you are supposed to distribute, which may not be what I really want. Yeah. No, government is a shareholder, by the way. Government is a shareholder of all the companies. Government owns 30%. Income tax.
Can I make
corporate tax?
Yeah, let's make progress, Manda, yes?
Chairman, I think the points made are valid, and I must accept that the 60% was not a number that was arrived at through a scientific or very rigorous process. It was the intention, Chair, so that maybe in the decision making, the intention of Treasury was to achieve a balance between the two. First is growing the company, because the shareholders have a responsibility of also growing. But if the shareholders meet and agree, as the PS was saying, that we are this year investing so much, the problem is when you declare profits, but you are not distributing, which sends a signal that you intend to hold those funds, but you are not reinvesting. So somebody must come and say, to trigger some action is to say, if you don't take any action, we will dim. And that should be seen as a way of signaling that government wants some action in terms of reinvestment. Either you send a clear signal that this is yours, but it's not intended to infringe on the role of the boards, but it's just to incentivize that balance between investment and what then is distributed. Thank you.
So can we proceed? Yes, let's make progress. Yeah. We can proceed.
Yes.
Okay, maybe go to the next stage.
Chair, allow me just to quickly clarify and correct something on the question regarding the definition of royalties. I just want to clarify, from the reading of the text, it is restricted to using a card. So if you look at the wording of the law, it says, including access, participation, or usage rights in such system through a card. So actually, that particular one does not bring in Safaricom. It's only the card schemes.
The earlier
definition?
definition in
Yes, because I'd combined the one for ICT platform, yes, on the royalty.
The definition of royalty.
Yes.
That's
yeah.
That's
but the
okay.
one for VAT or financial services, that stands.
So, yes, we are clear. On royalties, it doesn't affect like
yes.
M-Pesa transactions,
Yes.
that goes at a multiple platform.
Yes.
But I agree that clause 7 would affect M-Pesa transactions.
The one for VAT, financial services.
Yes, yes.
Correct.
Okay.
Yes, so that one the discussion
So that later, probably when you will finish,
yes,
you still need to look at that on the aspect of interchange fee. Because we have a definition on interchange fee referring as a management fee. How do you divorce it from the being interpreted as a management fee subject to normal withholding taxes as an income, because interchange is income to the card holders, which are banks for this purpose, which end up paying income tax, normal as corporation income tax. And again, where we want to define it as royalties subject to withholding taxes. So anyone would believe this particular transaction will be subjected to taxation 3 times, as management fee, as income tax, and as withholding tax from this discussion. So later you will make a word on that.
Okay. But even maybe just quickly, just to touch on it, the interchange fees is to the card companies, not to the banks. It's the banks that pay. So you pay when the banks will withhold. So it's not on the banks.
All right, next.
Thank you, Chair. So the next one is on betting. On the issue of betting, I would say that betting is largely about clarification, because we do agree that there has been a bit of tweaks here and there on that provision for betting. So 2 things on the bit of betting. One, when taxation was brought on withdrawals, so staking and withdrawals, there was one critical element that was left out. Betting largely has been on using wallets, where you put money, it could be in Safaricom, you put it in a betting wallet and then you transact from there. But the bit that was left out is that fact that betting companies or the betting industry also has an element of cash or cash equivalent. So even when you're winning, there is that way where you're given cash. It could be the land-based casinos. You're actually given cash or a cash equivalent, which now the chips, which now you cash out. So that bit, in just bringing uniformity to the industry, that bit was not in the definition. So the definition of winnings to bring in cash and cash equivalent. That means when you're withdrawing, when you're staking, it doesn't matter whether it's through a wallet or cash. So that's the first item. 2, there was an amendment in the Finance Act 2025, that I think that amendment left out some element of betting. And in this case, specifically winnings from prize competitions and lotteries. Now, that is still betting. So what are we trying to do here? Is that looking at that definition of winning, bring those on board as well, so that as long as it is betting, then all of them are captured in there. So it's not that we are bringing in something new. We are looking at what does betting entail. 1, those ones of cash and cash equivalent on the withdrawal that had been left out. And 2, anything to do with betting, because then there has to be uniformity and fairness and equity. That if we're talking about winnings from whatever you get on the wallets, then even prize competition, it is a bet. Getting into a lottery, you win. It is also, you had to bet to win that. So that is what we are bringing in that definition of winnings under the betting. Chair, I'll go to the...
I'll move from there. The bettors were here, and they said, when you change the law, this financial year, they have been able to remit an extra 9 billion to KRA. Now, when we change this, are we likely to have a reverse on that? Because, you see, as much as we are fighting betting, we still need revenue.
So what is the, whatever you are proposing, what are we supposed to raise?
And if you're saying your target is to target like price competition and?
Not a risk, Chair.
And not a risk. Why not just make the text like that? Let's just say it is price competition and rotaries and leave the betters alone. Because now the challenge is when there is, I've noticed this over now a few years that we've been in this committee, once the definition doesn't seem to be clear, what the taxpayer will do is run to court. So by the time the court is clearing what's the definition, then during that time you've lost 1 or 2 or 3 months of revenue.
Thank you, Chair. I'm just picking from the comment of the taxes raised. So if you look at this definition, all of them are trying to expand the tax base. And that's what I said earlier. Bring equity, bring fairness. We are all betting. It could be different modes of betting, but we're bringing everyone into the bracket. Now, that bit, that what happened in Finance Act 2025, removing the charging section on this one, it was there. But I think removing that resulted in a dip in losses. At least this is the feedback received from the KRA team. So, back to your comment, Chair, of how does the law read? In reading that definition, does it bring everybody? Does it leave others out? And that is why this specific definition is very precise on what is the intention. Yeah, very specific on what the intention is. Chair, I'll move on to the one for scrap. And Chair, before I move to the one for scrap, a very quick one, which we were raised on the bit of CBK stuff. And you asked what is special about this, the CBK. So for the central bank, what has happened is all of us, if you have a mortgage from banks that are listed under the first schedule, then you get a relief. Now, if you look at the first schedule, CBK is not there. So it disadvantages the staff of CBK. So that's what we are doing. That recognizing that even because the staff members of CBK get a mortgage from CBK, as opposed to getting from commercial banks.
No, I will repeat the explanation.
So as it is now, anyone who has a mortgage from the banks that are listed and recognized under the first schedule of the Act, which is the commercial banks as we know them, we all get a mortgage relief. If you look at your payroll, there's a mortgage relief. Now, central bank staff do not ordinarily get from the commercial banks. So they will get some, but they would also get from their own scheme, CBK. But because of that, over time, I think it was just glaring inadvertent.
Yeah, I have a problem with that.
Yes.
Because...
but now, Honorable Mboni, yes. You didn't even wait for... No, she has finished. No, she hasn't. Please finish first. Yeah?
And just, as she finishes, just to declare, I was a victim. I was central banker, and I took 2 schemes. And I think I did not have the benefit of getting that relief.
So from all commercial banks, so the way the law is what the mortgage relief, you get a mortgage relief as long as you have a mortgage, but if it is a bank recognized and listed under the first schedule. Yeah? So, I think it's a first, is it first or third? First. I think it's a first schedule. So CBK is not listed as one of the banks. Yet you have staff of CBK who benefit from a mortgage issued by CBK. So what we are doing is to include them there, just the same way any other person would benefit from a mortgage relief from other banks. So also, if you get a mortgage from CBK, then you also qualify for a relief, just like any other commercial bank.
Actually, my problem is...
Port schedule, Chair, sorry.
Even Parliament is not benefit for this. Yes. Parliament is not benefit from this. 2, maybe why KRA they are not in that schedule is because if CBK, their interest rates are low. They are 5% or 3%, right?
like Parliament. So therefore, if we are bringing in CBK, then we also need to consider.
But even if you have 3% and you are paying a mortgage, it's still a part of relief. There's no threshold for what amount of mortgage you should take to get a relief.
Chair, maybe just to clarify, you see, Central Bank, okay, is a bank. It's just that it's not a commercial bank like we know it. So the disadvantage, so basically what is clarifying is what I'd said earlier, that the central bank cannot engage in mortgage arrangements with commercial banks. So they have, for reasons that we know, so they have their own scheme, but they're a bank, just that they have their own scheme. So being a bank, their staff were disadvantaged. So we're trying to say, just like any other bank, we have onboarded them in the law.
Yeah, then in that case, instead of expressly putting it here, then it would be to amend the fourth schedule, where we are saying a bank or financial institution or mortgage finance company listed under the Banking Act would be to add central bank on the fourth schedule then. Yeah.
Isn't that what we've done?
Yeah. Then it's easier to just add, well, the expert differs there at the back. Because because the interpretation of this is we have a mortgage scheme by Parliamentary Service Commission. We pay mortgage at 3%, but we do not get exempt. We don't get relief for that. So then, why are we? Yes.
In fact, maybe
we should tell if one was visit there, then having to move around.
Yeah, as he's going to respond, let us address the question of equity on this purpose. Because anything that is applicable to any other taxpayer should be applicable to all. So in fact, even referring to this fourth schedule, whatever is happening in fourth schedule and is not happening to the other taxpayers, already there is an inequity there. And under Article 10, it looks like there is something need to be corrected here. So it's something that has to be. And then number two, you mentioned Bankers Act and CBK. So are they different in terms of provisions of the Kenyan Banking Act and CBK? Does it not mention? Is it not mentioned in the Banking Act as central bank?
Go ahead.
Central Bank are not even aware about this. We were here with the head of RIGO and the deputy governor. They were not even aware there was a clause. Why are you giving them a benefit when they don't even aware? They don't even require it.
I confirm. First, let's make let's set the record straight. The governor wrote to our CS. The governor is Kamau Thuge in a letter dated October 31st. So we have, and we can share with you. We have a letter from the governor of the central bank to our minister on this matter. So maybe those who came here were not aware.
We also got that letter. We got that letter, I think, yesterday. Yeah. It's okay today. They have it to us today. But when we met the deputy governor 2 days ago, and the head of legal and the CFO, they had no idea.
Sometimes it may happen like that. Sometimes, okay. Sometimes maybe the government
but then I think it would be more neat to include central bank in the fourth schedule, so that the same way, if I get a loan, if you get a mortgage from Barclays, I get that relief. Then it should be the same for central bank, and because central bank only lends to personal loans to the staff, not to, then automatically they would qualify. Yes. Yeah.
I'm sure the essence of mortgage is either to build or to acquire a house for home ownership. So any other public servant or civil servant or state officer who happens to enjoy that privilege in the course of duty to own it, what should be happening to the other institutions should happen across the board.
Yes.
Because this is another question that this thing is awakening that probably have not been reached to be looked at.
Yes, and just before the expert comes, the youngest expert comes in, we agree if any Kenyan takes a mortgage
from a commercial bank, they get a mortgage relief. Every Kenyan, if you get a mortgage from any commercial bank, you get a mortgage relief. However, if that Kenyan happens to be a staff of the Central Bank of Kenya and get a mortgage from the Central Bank of Kenya, they will not get a mortgage relief because Central Bank of Kenya is not listed as a financial institution in the fourth schedule. But that's why I'm saying then, instead of now what they have proposed for in law, then would be to bring Central Bank of Kenya to the fourth schedule so that it doesn't appear like we are favoring only Central Bank staff, that appears it's across everyone. Yes, over to you.
Through the chair and my peers, you see, listing Central Bank in the fourth schedule would create another problem because those financial institutions listed in the fourth schedules also enjoy other forms of exemptions, especially in income tax. But Central Bank of Kenya, being a regulator and according to PFM Act, they are supposed to only enjoy those exemptions if they remit a minimum of 90% of their surplus to the exchequer. So if you list them, they will automatically be exempt from income tax. And that would create another challenge where they may not remit 90%. That would create a gap where they may not remit 90% in not be compliant with the PFM Act and still enjoy the tax exemption. Now the challenge actually here is the proposal came. Central Bank of Kenya, being a regulator of financial institutions, especially commercial banks, they cannot enter into those contracts to avoid conflict of interest. So every other public servant, every other Kenya, even National Treasury, KRA, can get into contracts with, say, KCB for the mortgage scheme, where the KCB is more of a holder of the money so that they charge a lower interest rate. But Central Bank cannot pick a bank it regulates to enter into the scheme and it disperse the fund for the benefit of its employees to that bank because it raised the questions of why did you choose KCB and not NCBA? Is KCB a better commercial bank than NCBA? It will also pose the challenge of liquidity ratio. How does it enforce liquidity ratio of KCB if some of those funds it has given to KCB? KCB will say, okay, the liquidity ratio is supposed to be this much, but part of this is what you've given us for your employees. So to avoid that, it cannot get into mortgage contracts with the banks. That's why the National Treasury proposed to explicitly exempt central bank employees in the provisions of Income Tax Act and not the fourth schedule to avoid creating another gap.
And Chair, just to clarify, for record purpose, does CPK beneficiaries of this mortgage today attract preferential treatment for record purpose in terms of rates?
Which role is that the intention of this provision?
Usually, even other institutions, whenever they enter into those contracts with the commercial banks, they negotiate the rate. So they usually, if I go to KCB to get a mortgage as a National Treasury officer, I would get a lower rate as opposed to going there as an individual person. Because, say, for example, KCB has entered into a contract with National Treasury to provide mortgage at a lower rate for me.
Actually,
so there's preferential treatment across board.
It's 5% currently as we speak. And for central bank, I remember it used to be 3% in our times. I don't know now, but it is lower. It's below the market rate.
So for me, I don't understand the logic for the provisions. Why only central bank?
Let me explain again. You are consulting.
Why in this law?
You are consulting your constituents when you're outside. So let me help you here. If anybody takes a loan from a commercial bank, including yourself, a mortgage, you get a mortgage relief on your payslip. But central bank staff don't get loans from commercial banks. They get them from the central bank. And therefore, that discriminates them. They don't get a relief. And I thought it would be easy to put them on the fourth schedule, but they have, the expert here gives us a complication of how that will affect the PFM Act and the 90% we need to disperse to the government. Yes, Rispa?
Chair, I want to just point out the fact that putting that provision under Section 15 is consistent with the existing law. Why? If you look at 15.3b, where all of us benefit from that mortgage relief, it's actually under Section 15.3b of the Income Tax Act, as is. 15.3b. And that section, if you allow me, even as you come into it, it says the amount of interest not exceeding 360,000 shillings paid by him in respect of that year of income upon money borrowed by him from one of the first 6 financial institutions specified in the 4th schedule. Yeah? And applied to the construction of purchase of improvement or premises. So basically, Section 15 is the one that dictates what is allowable for tax purposes. So there, it covers all of us as long as it is, and it makes reference to the 4th schedule, and it talks about the listed banks. So that, in essence, excludes CBK. But everybody else borrowing from everywhere else in commercial banks benefits.
Oh my God. Chair, you said I'm new to this committee on matters financial management. But I'm learning today there is a category of public officers who are paid directly by the Central Bank of Kenya as a bank. What are we saying here?
The staff, they are staff.
So let me tell you.
May I clarify? Chair?
Proceed.
So, as is now, we all benefit from a mortgage relief on our pay slips. Let me explain. So, for example, from the parliamentary side, the parliament will get into an arrangement.
In fact, just hold on. It is not just all of us, because all of us seems to be it's like public civil servants. So it is. You should clarify it, every Kenyan.
Correct. So every Kenyan who has access to a mortgage from a commercial bank that is listed on the 4th schedule, of the Income Tax Act, every single Kenya, public, private, all of us benefit from a mortgage relief. That's a starting point. And that provision is expressly stated under Section 15.3b of the Income Tax Act. Now, over time, what was missed out, and for reasons given that the CBK staff, so Parliament, for example, has a scheme, but that scheme is with a bank. And that bank is listed in the 4th schedule. That's how you benefit, if you're talking about parliamentary. But a private sector, someone in the private sector, as long as that mortgage is from those banks listed. Now, if you look at the CBK staff, because CBK cannot get into that scheme with a commercial bank because of that regulatory aspect, it has its own scheme. And it's providing a fund where then it gives mortgage to its staff. But because that provision, Section 15.3b, is only making reference to the banks listed in the 4th schedule, it has not recognized that CBK, as a bank, can also provide a mortgage. So that's why CBK staff were disadvantaged.
Apart from one challenge.
Chair, let me before you come there.
Yes.
So that you will always preside over me. I'm still on this, why I was asking whether they are deriving this benefit on a preferential rate vis-a-vis market rate. And then I wish to know from RESPA, from KRA point of view, where do you confer this benefit of relief? Is it at the market rate or at preferential rate? And if that preferential rate, which is already a benefit, then it means anyone who acquires a particular facility is conferred with two benefits: preferential rate and tax relief. And lastly, to Chair, reading this particular section, 15.3b, I've been hearing people speaking about discriminating gender. The law is very discriminating. Why is it saying him and not her?
But even before, when you go, that argument raised by raising is also, okay, let me put a different example. People that get mortgages from microfinance institutions, they will not qualify for this relief because microfinance institutions are not listed in the fourth schedule. Secondly, even for any other institution that has a mortgage fund, like for example, Parliamentary Service Commission has a fund for mortgages. But it means that all these members of parliament and even all the parliamentary staff do not qualify for this mortgage relief because Parliamentary Service Commission is not listed in the fourth schedule. And therefore, then, following that, then we could argue that this is favoritism to those staff. Unless now we open up to all the mortgages, including from SACCOs. SACCOs now are giving mortgages. Microfinance institutions are giving mortgages, but all those entities not qualify for mortgage relief.
And Chair, to tie to that, you see, the question was, why in this law? Why not in that other law whether CBK scheme or wherever is established?
Chair, let me understand this. You know, if it's a commercial bank, let's say you have KCB, for example. You know, KCB has two sets of mortgages. There's a mortgage for the staff, right, which has a lower interest rate. And then there's mortgage for others, right? In fact, the interest is around 18%, 19%, cooperative bank, because I was looking for something there. So why do you want to give the ones who are enjoying preferential treatments, another relief, because they're already enjoying a relief? Is it like just like us, we are enjoying a relief? And then why do you want to give them those ones? I think the ones which will be given, we are not even enjoying relief. Preferential rates, yes. So why do you want to give them the staff another relief when they are already enjoying when they are already enjoying lower interest rates?
Yes, let's make
and it's true. You know, when the PS was talking, he said we are trying to reduce tax expenditure. You remember, that's what you told us. We are trying to reduce tax expenditure. Now, this one, this is not reducing. This actually increases the tax expenditure.
Money.
Yes, let's make progress.
If you allow us, perhaps we can do more consultation on this matter so that we don't...
Okay, yes. Next.
Chairman, there are only 6 banks listed to provide the relief. 6 commercial banks in the force, yeah.
Okay. Sorry, I think maybe just for purpose of, I think the first 6 specified financial institutions in the 4th schedule are a bank or a financial institution licensed under the Banking Act, an insurance company licensed under the Insurance Act, a building society registered under the Buildings Act, a National Housing Corporation established under the Housing Act, a cooperative society registered under the Cooperative Societies Act, and mortgage refinance companies licensed under the Central Bank of Kenya. So the Central Bank of Kenya does not fall under this. Yet it has a scheme. And for good reason. Yes, but it has its staff who are also getting mortgage loans from the Central Bank.
That's okay,
but those staff now cannot benefit from
which is okay, yes. But we're also saying so are
So as people, Kenyans, that get loans from microfinance, for example, institutions, because as you rightfully read, microfinance institutions are not listed in the fourth schedule. So staff of entities that have their own mortgage schemes, for example, Parliamentary Service Commission, I am sure the Judiciary Service Commission also have a mortgage scheme that they loan to their employees. The Judiciary Service Commission staff also do not benefit from mortgage scheme. And therefore then, if you open this up to central bank staff, the risk is now all these other entities that have a mortgage scheme for their staff will also now come to us to be exempted the same way central bank staff have. Anyway, I think we have overstayed on this matter. Let's make progress. Thank you very much. So I think we can go on the last item before I discuss the filing of income returns.
The scrap. Chair, the provision on the scrap has been an issue that, if you recall, perhaps in conversations, there's been this issue of missing traders. I think that's a simpler way of putting a context to it. And the question that was raised by Mheshimiwa was, would it then encourage vandalism? And we see then bridges being cut. So the whole thing about the scrap metal, there's been an attempt to try and contain, so to speak, without hurting the manufacturing sector. Because the logic behind it is, how do we keep track of the input into the manufacturing sector? Now, from a VAT perspective specifically, let me start from a VAT perspective. When people, I'm not sure, I'm cautious on which word to call them, but when you collect scrap, I think you understand what I'm saying, Chair. When you collect scrap everywhere, chuma, and you go and sell, yeah, you're walking on the road and you collect this scrap and you go to sell to a manufacturing sector, to a plant. When they buy from you, they can buy it from, say, for 1,000 shillings, yeah, per kilo, for argument's sake. But because there's no track, and you'll find that it is an input that maybe is not receipted, this raw material was not bought anywhere, it was just chuma that was removed from our roads, wherever, lighting. And when it is sold, as an example, some of the things we've been saying is it comes in as input into the manufacturing sector, but upon sale, it can be declared by the manufacturing concern as if it was bought for 10,000 per kilo, or even 100,000. What that does is, it is a declaration of 1,000 shillings and there's a VAT element. It will mean 16% was only on 1,000. That comes in as the input-output. But when someone is maybe recording, they would say, I bought it for 100,000 for argument's sake. So what that means is VAT has been exaggerated. And it means when you're coming to even claim, you're claiming a VAT higher than what you actually paid. And that creates that element of missing trader, partially. There are very many angles to it. So what are we doing here? Because we're saying we don't want to hurt the manufacturing concern, but we'd like to keep track of this input. So we start by saying, then there's no VAT on scrap. Because in the law, VAT has been removed on scrap. But instead, let us introduce a 1.5 withholding tax to be withheld by the buyer. Because that person who collected brought 1,000 kgs, for even say 50 kgs, small. So when they are being paid, there will be a 1.5% withheld. Because the person making the payment is a manufacturing concern, and that's the final tax. Because it's being paid to the person who just walked in and brought 20, 30 kgs. So in this whole scrap, we're saying we will keep tab of the input, we will remove that abuse of missing trader, but at least then there will not be also claims of VAT that was really never remitted to government. So that's really the logic. And Chair, I mean, it was pleasing to see last night in the news that the scrap metal dealers were actually appreciative of that provision. Thank you, Chair.
Thank you. Okay, so there was this question on why revise the due dates for filing income tax. And we want to answer like this, that all income tax returns are required to be filed by 30th June, regardless of the nature of the return. But you find that there are some income tax, some taxpayers who file nil returns. So what we are saying is that those who file nil returns, by end of December, then you have 1 month just to make sure you file. You don't need to wait for another 6 months. Then those who earn only employment income, their taxes are paid when their salaries are paid. So again, we don't need to wait. We don't need to wait for 6 months. We are giving you 4 months to file your returns. All the others now have up to June. The objective of this is we want to lessen the work of KRA, because KRA should be able to have enough time to check and do the verification. And I think this is a way of improving administration of tax. Otherwise, it clogs the system. Everybody wants to do it. Like now in this June, everybody is trying to file returns. Even those who have nil returns are clogging the system for KRA. So it's just a saying, let's be smart. 1 month after you file and it's nil return, you do get out of, don't be in the traffic jam. Then if you are only earning salary, you have 4 months after the end of the year of your income to file with KRA. The rest now have up to June. That is the explanation. Yeah, and if that is not the spirit of the text that was drafted, then we could now redraft it such that it brings that clarity.
Actually, the auditors were here and they were saying that the spirit is to reduce up to 4 months. I think that's what they were up in arms. But I like your explanation. You know the problem with us Kenyans. Even if you give them 1 year, you find that in December is when they are filing the returns. So, and my argument was that we are overloading them. But I'm also telling them now, I've even seen an opportunity where they employ more accountants because there are so many accountants unemployed. If you feel the work is a lot, why can't you expand the employment base so that other people can get jobs? But I think I like what you are saying, that 1 month, 4 months, and 6 months, so that at least.
Yes, if you want to review the text better, you have the leeway to do so that it should capture what you have said.
We will do that. We will do that.
Okay.
We have tried to answer almost all the questions.
Now, the tax procedures and the issue of the provision which is now removing automatic stay when a person is still subjecting a tax contestation to legal process. The operation of the enforcement notice.
Either Albert or Rispa?
Yes, and tied to that, Chair, if you may permit, that before us people were saying, no, we want to appeal up to the Supreme Court where possible. They also don't want the enforcement notices to be issued. And I constantly asked the question, where then is the space for ouster clause or finality clauses in litigation, and whether we could say appeal to the High Court shall be final, which they also contested heavily. And then I was giving them the option of time limit clauses, like happens in elections, so that we say, in as much as you can go to the Supreme Court with appeals if you want, all the decision concerning a contestation must be finalized within maybe 1 year or 6 months. I don't know your thoughts.
Thank you, Chair. Okay. So what has happened in that provision is that historically, indeed, where there's any business transaction, there's likely to be a dispute. And that is why the law has provided that process where each party has a right of appeal. What has been done over time is also try and introduce other methods of making that process easier. For example, the alternative dispute resolution. But it still doesn't take away the right of appeal. Now, specifically to your question of the stay, the law has had, quote unquote, or has been read to imply that there's an automatic stay when you make an appeal. So we go to the Tax Appeals Tribunal, it goes to the High Court, and because there's an appeal in place, and some parties have actually abused that process. So what we are saying is we're not taking away the right of appeal, but we are saying let it not be implied to mean that it is an automatic stay. You want a stay, apply for the stay. And that stay will cover the person, the aggrieved party, for the period that the matter is in court or running through the appeal process to the highest level if the two parties so wish. So on the issue of the time limit, yes.
Before you go there, you see the worry I'm seeing as a practitioner in law is that hearing of applications for stay are going to take the tribunal more time than going directly to the substantive issues. And invariably, they'll still give them. It is the interview for the last judges, you saw it coming a lot, most of the judges who are going to the Court of Appeal and even Supreme Court, that we have our courts taking a lot of time on hearing applications for stay, and it will be the main now task. Instead of the tax tribunal and courts going straight to expeditiously resolve the issue in dispute about the tax imposed. I don't know whether you consider that in terms of the efficiency you are talking about, and that is why I was saying, why don't we allow them to appeal, but say like we do with elections, that disputes concerning taxes shall be resolved within 1 year. You get what I'm talking about? Or even 6 months. So whether you're going to the Supreme Court, you're going to the Court of Appeal, you can have your automatic stay against enforcement notice, but there must be substantive resolution within some time, because we need those taxes if they are truly due.
Thank you, Chair. Indeed, even that proposal, whichever way it goes, it still brings that other third party, and that third party being the judiciary into the mix, because when you say it must be addressed within 1 year, then that falls in a different space, because when the matter goes to the tribunal or goes to the High Court, both the taxpayer and the Revenue Authority are parties to the dispute. So
it has happened, yes. And remember we increased the numbers of judges in the Court of Appeal to 70 from a bare, I think they were barely 20 or less. We have also increased the number of judges as Parliament for the High Court, and so they expand the commercial division. Once we say determinations in finality shall be within this period, because we are dealing with an issue which is holding money between people.
Yeah. So while
as Moenda interjects, I think it's important to put it on record. You know, when Kaluma, when you say we have increased the number of judges, that is not correct. Parliament has, National Assembly has only increased resources to the judiciary that has enabled them increase the number of judges. Although it is not us who increase the number of judges.
Just before my colleague comes on. So this is a delicate balance in the sense that historically, and Kerry can actually demonstrate that, sometimes some appeals are done deliberately, so that while the matter is still held in abeyance somewhere, the company is stripped of its assets or it's liquidated. When the matter is finally determined, when you're coming to enforce, there's actually a shell of a company. There was that attempt of saying that when you appeal, then you pay X amount. You see, those are all attempts to say, how can we secure this revenue even as the appeal is going on? So in this case, we would the view has been, at least with a stay, you see, there's not that penalty of you must pay 30% or 20% or 60% of tax in dispute, for example. But the whole idea is to ensure that there is no abuse of that provision when the matter is going through the appeal process. Thank you, Chair.
Every time you have brought this proposal, the stakeholders have said this goes against the law of fair administrative justice because we have not allowed the taxpayer to explore all the options that are available for them, and so you are like condemning them, and that has been the argument on that particular clause, especially.
Can I clarify, and I will start by noting that I am not speaking as a legal expert, but from the perspective of fiscal policy and the risks we see, that and taking into account that these are matters that have been already canvassed in a judicial process, because I believe even the tax appeals tribunal are part of that. So there's been a decision that has taken place. So the issues are known. And what we are saying is that, Chair, instead of an automatic stay, so that we also don't have cases being parked in court, that the court, as an independent arbiter, then considers and says, is there merit in providing, at the point when they are deciding, then that stay application, a decision is made. Because we also see a risk to matters also taking too long on the Treasury perspective. And we also do recognize that there is need to protect the rights of the taxpayer who is petitioning. But I think it's our plea is that there should be a fair balance, because there's been a decision that has been made in favor, in this case, in favor of KRA, but we also recognize the right to appeal. So I think it's a fair balance, but we also need, as Parliament, you also need to protect government's objective of collecting sufficient revenue.
All right, next.
Would you mind to clarify?
Yes, no, go ahead.
Okay. Well, you raised a question on pre-populated tax returns. And while I was trying to follow it up, there is something that has not come out clear. In case of errors, who bears the burden? Because on explanation, it never came out clear on the treatment of how will that regime can be addressed, because systems are prone to errors. We've had several occasions with e-teams, with IFMIS transmission, and sometimes errors occur during the time of translations also. Or at times returns are failing to be captured. So with this pre-populated data, what happens on that, and especially to the taxpayer in case of errors that have arisen? Thank you.
Yeah, Chair. Chair, there was also the question of enhanced enforcement of KRA agencies, agents' notices whereby KRA can issue agent notices to recover unpaid taxes, either to the bank, employer, customer, even tenant. Now you are telling me KRA issues notice to my tenant to recover taxes, and how does that one now also contradict Data Protection Act? I need to understand that.
Thank you, Chair. So
maybe,
the first one...
And just before we go this back, I'm trying to see where that is in the Constitution. Article 48 of our Constitution, access to justice, says the state shall ensure access to justice for all persons. And so I think that's where we are. If we are not allowing them to access justice and you're telling them pay, then the risk is, even if we granted you this wish, then it could easily be questioned by courts because of contravention of both Article 48 and Article 50 and Article 47 of our Constitution. Let's go to the next matter.
Thank you, Chair. So the one for pre-populated returns, so there are two things there. One, we are, as government, we've been talking about efficiency, simplicity, even to try and simplify compliance. And in doing that, there are other countries that have gone before us, case in point, South Africa, closer home, where they pre-populate a return based on data already available to the Revenue Authority. So in this case, your question was who bears the cost when there is a penalty or if there is an error. So with that pre-populated return, and maybe you may have noticed it even now when trying to file your return, it is not final. So when a pre-populated return exists, you actually, as a taxpayer, have the opportunity to review it and accept or not accept. So it is not that if it is pre-populated, then it means you must accept it and file. Now further, in this very finance bill again, there's been an introduction of what the commissioner can waive, penalties the commissioner can waive if in relation to system challenges. So I think the figure is 2 million. If it is as a result of a system hiccup, and you see with system hiccup, more often than not, we'd say taxpayers are encouraged, you can take a screenshot, you can take a picture, because you'll be demonstrating that the problem I had or the reason why I didn't file was because there was a system challenge. So right now, the waiver process, any amount above 1.5 million had to come to Treasury. But now to make that process simpler, as per the proposals in the finance bill, as long as it is about 2 million and below, then the commission, and it is relation to systems, then that can be waived if it can be demonstrated. So those are the two things. So the pre-populated return is not final. And then one more thing quickly to add is that the reason why also the pre-populated return, I think it is a move in the right direction, noting that it doesn't bind the taxpayer, is looking at case in point where taxpayers file, so a taxpayer will file a nil return, but the same taxpayer, if you look on the eating side, has transactions that have been moving. So that was something that was very evident here, that the person has actually transacted, their PIN has been used on eatings, data is available, but on this other side they have filed nil. Thank you, Chair.
So, maybe before we go
No, but the current provisions in the Tax Procedures Act, there's nothing that will, if KRA notices that you're filing an return and they are seeing on the e-teams that their transactions are happening, there's nothing that will stop KRA from doing an assessment on the taxpayer. So that's why now we feel, okay, stakeholders were feeling that this might be now sending KRA on a fishing expedition and an extra burden on the taxpayer, because now they have to now constantly trying to justify those particular claims. Whereas you have the analytics tools, for example, e-teams, to, if you suspect that I'm filing any returns and I am earning, we are withholding taxes every and all that, that's why, for example, there's withholding tax, then you can come and do an assessment of that taxpayer. Why do you think that why do you need this new powers for pre-populated returns when you're already giving you powers to do assessment on that taxpayer you suspect is evading tax?
Chairman, you raise an important question, but remember we've been saying we want to expand the tax base. And Chair, I know even from engaging with KRA, you know the challenges they are facing. If we are ever going to expand this tax base, first, KRA must have visibility. While respecting the data protection law, they should have access to information. And number two, they should then deploy digital solutions to be able to bring more people on the tax base. On this particular one, KRA, the proposal is not for KRA to go on an expedition looking for, this is data that they already have. I'll give you an example. You are an employer, you are paying SHA. We have your information, and we use it. Chair, that information is within the public sector. It is, and it's information that under the law, KRA is allowed to access.
So it is not going on an expedition beyond the data protection provision. It is data that is already available within KRA. For example, even utilities, KRA are working with Kenya Power. And within government, that information is not secret information. You are paying your consumption of power. We can see how many meters that are registered under your name. It is fair to allow KRA to use that data. That's the idea, Chairman. Chair, well, the ideas are good.
Thank you.
Some of the issues that are coming to our desk is also the lamentations of the taxpayers, or now, and this purely not legal but administrative, the relationship between the tax collector and the taxpayer, the abuse of these particular latitudes, and the frustration of taxpayer. This is a big issue we really don't know because it cannot be legalized, but the demonstration from the tax collector, the commissioner, on how to treat your taxpayers in a humane and fair way. That's why most of these provisions are sensitive to taxpayers because of the historical issues of such provisions.
There are even current ones. There is a good reason as to why transparency indicated this year that KRA have gone beyond the police on those negative issues. So they are worried about giving them too much coercive, tools. You get what I'm talking about?
Look at some reforms we are making, for instance, at National Treasury, where we are saying all invoices issued through IFMIS must be e-Teams compliant. So if we are doing business with government, then KRA must have sight of whatever transaction that takes place. That's not infringing on your right. It's just that KRA is able to know in advance the transaction you have had. And so if you don't end up not filing your returns, then the Revenue Authority can now come for you. And by the way, all over, no one is willing to voluntarily pay tax. It is the nature that you have to go for it. So we need to give KRA the more authority, more power to be able to get what is due. You have seen we are operating in a very thin fiscal space. The gap between the revenues and expenditures is widening. The needs of our people, spending needs are rising, but we are not collecting enough. So really, my plea to the committee is that we support measures that will strengthen revenue collection. And maybe at this point, I can also go to I can still talk on the point of agency notices. I think that question was asked. And in the finance bill, we are proposing to amend the Tax Procedures Act to allow the commissioner to issue agency notices for recovery of taxes where a matter has been determined by, in favor of the commissioner, but no stay order has been issued. So, but currently, when the law states that the current law restricts the commissioner from issuing an agency notice once a taxpayer files a notice of appeal, even where the tax appeals tribunal or a court has already determined the matter in favor of the commissioner. So this just delays the recovery of taxes. So what we are saying here is that we want to align the tax recovery with the general principle that filing an appeal does not by itself stop enforcement unless a stay or order is granted. I think it's very clear.
And Chair, on the issue of whether it is taking rights of the taxpayer, that particular one, it does not here. Thank you.
My only worry was the amount of work it would give the appellate court. Because I was saying, if you look at even applications for stay, 5.2b in the Court of Appeal, I can tell you, PS, it reached a time that is the only work the Court of Appeal was doing, getting stay. Yeah. My other worry tied to it is that for how long should the court have the file once you get the stay? And that is why I was, thinking of that time limit clauses in terms of, setting a period for determination of tax disputes. Because imagine a person goes for stay, number one, they clog the court instead of dealing with the substantive matter. Then once he gets the stay, you know the attitude of lawyers. What do? They throw the thing back. So the guy has money, the guy has an order. You have not limited for how long the court should treat the matter. Yet there is a good reason as to why we created the commercial courts.
Okay. Let's make progress. But perhaps just to note on the pre-populated returns, I think it would also be important to give the taxpayer an opportunity to reject, so that it is not.
Should be there.
It's not in the bill. It's not. A person required to submit or lodge a tax return may rely on the populated return generated by the commissioner
Can we make sure we
or lodge the return. But it's okay. I'm just thinking aloud. We will amend. Proceed.
Okay, so maybe just so that we move away on this issue of agency notice, the point we are making is that by giving this proposal in the finance bill, what we are doing is we are promoting timely recovery of liabilities, but it does not necessarily take away the right of the taxpayer from seeking a stay. So it's a balance. At least if we have opportunity, KRA can collect money quickly. But if the taxpayer feels strongly that they are not supposed to pay, then they have the right to still get the justice from court.
I get you.
Yes.
I understand, because when you go for stay, there are considerations. Yes. And I see it will put off people who don't have a clear case on appeal from never appealing, because it's a consideration that will be used to deny you stay. But I still reiterate that we must limit the time within which, and more so in cases where, as you say, if we were to agree with you on the amendment, we now have a stay being sought. How long do you stay? Will they stay? You really,
yes, Kaluma, I know you're very passionate about that matter, and you've really made your case. And let's make progress.
It's only Mitumba. I think there was a question on Mitumba. Maybe you can finish with that. Yeah.
Chairman, the issue around Mitumba.
There's Mitumba, and then there is aircraft.
Yes.
And
Chair, on the Mitumba, Chair, you remember the national tax policy and the MTRS we brought to you. One of the big concerns raised with the Treasury by Kenyans was the complexity of the tax, especially in some of these sectors. And with the Mitumba sector in particular, they have they came and met the cabinet secretary, and their request was simplification of the tax and avoiding, during trading is where you want to avoid, you don't want in the local operations to have taxes loaded on these transactions. So the intention here is to introduce just one tax at the point of entry, the port of entry. And it is a simplified tax, is 1.5% on it's on the gross income, and then we have removed other taxes that are applicable and made it clear that within the local market there will be no further taxes. So that's the idea, Chair, and this is one proposal that I support. I think on the issue of competition, I think these are two different markets. The market for Mitumba cannot be seen to be directly eating into the new clothes, if you ask me. These are, and we still, even currently, Mitumba are still being sold. We are only simplifying the tax regime.
What is the effect on the local industry if you make it that easy?
I think
local textile industry, which the government is also struggling to revive. And I'm coming from that region.
Chairman, I think that is a matter that we would love to critically look at. But the intention of this was to say, even currently, Mitumba are still operating. It's not that we are making it currently. You know what was happening, Chair, is that because of this requirement for taxes, there were demands being made on these Mitumba traders. So this trade was being complicated and denying the beneficiaries of the Mitumba to easily access the Mitumba. So it is simplifying it, but there are also investments. What is affecting the manufacturing is actually other factors which government is working on. For example, power. The cost of power needs to come down. It is not the direct competition with the Mitumba, but we can look for those studies that demonstrate that even with the SEZs, the concerns in terms of racking was never, was actually things like power, things like regulation, but never the Mitumba. They did not see Mitumba as a direct, as being in direct competition with the new clothes.
And also maybe just to add, Mitumba trade is not necessarily illegitimate. It's a legitimate business. It's used clothing, and those who don't have clothes and can access cheap, even if it's used, it promotes their dignity. So it's a balance between putting on a new cloth, which is expensive, and also getting one that is cheap, but at least gives you dignity. So it's a choice, and I think so. Even between bilateral trade, I remember when I was PS trade, this matter came up between us and the U.S., and the U.S. had raised the issue of non-tariff barriers on trade in Mitumba, and it's a matter we had to make sure we address to make sure that there's flow of trade in a way that is in agreement with the bilateral trade. Yeah.
Yes. Can I add one more thing, Chair? I think the issue of cost is what we should take seriously, rather than seeing like Mitumba is indirect. If we brought down, remove or address the factors that are increasing the cost of manufacturing, and narrow the gap between the new clothes and the Mitumba, then and grow the incomes of Kenya, naturally that even that market can reduce. But as long as, Chairman, we have a significant number of our population that has low incomes, I think we need to facilitate access to and make it easy for them, even as we work on these other constraints, regulation, power, cost, and all these things, and to try and bring down. But I don't think that Mitumba, as they are now, are in direct competition with the manufacturing of textiles.
But I think also other policy initiatives, like I think it's like Bokaluma was saying, he went and bought a suit, I think in London, and he was very excited. He's buying a very good suit at Oxford Street, only to find it's made in Kenya. And then he got so disappointed that he returned it and was looking for one that is made in London or something. There was a government policy, I think it was during the last administration, requiring all civil servants to wear African clothes, I think, on Friday. And that really spurred a lot of, a lot of supporting that business. I think having such policy initiatives would also grow that sector, because in as much as these Mitumbas are, we are accessing to those people, but we're also exporting jobs. If remember growing up, there used to be a fundi. There used to be like a few fundis in the village who we would make our shirts, and they used to do a very good job. Now, without Mitumba, most of those small traders, like my mom is a trained tailor. I used to see her now make those clothes for us. But that business has been taken over by us. So I think it's also
important to make a policy direction to spur, that growth in that particular area. The issue of aircrafts, you have not responded to that.
Chairman, on the issue of aircrafts, we are trying to do, I think there are two things. One is we are protecting, as you will notice, that we are protecting the spare parts. And I think a concern was raised about taking this business of airlines outside. I think one of the business that we must protect is that one of maintenance. And that one we have protected. On the airlines, we have also protected the large aircrafts. So the ones that, ferry passengers across the main routes. What is being targeted here are the smaller aircraft like the choppers. And we do not think that, and it's again equity in terms of treatment of, because why exempt, why would we exempt those kind of aircrafts, which we know the buyers or the consumers of these are people who have the capability to pay tax. So it would be very difficult to justify exempting helicopters and those small aircrafts, which are chartered and used by a group that can pay, and then you are taxing other items that are consumed by the people who are seen as low income or middle income. I think it's that way, and it's consistent with the policy of also reducing tax expenditures. But we have protected the business of maintenance.
Okay. No, CP.
Thank you, Chair. I think that was almost the last, but there's something I would wish to get a comment from the PS. We had Auditor General appear before this committee on these matters, and on a submission pertaining tax amnesty, I think should be close for the 3 or so. In a submission from the findings she has found out during our audit, is that this particular treatment that is provided to encourage taxpayers in a judgment and a findings seem not to be bearing the fruits. I don't know from the peers whether in your analysis you've seen any growth in terms of tax collection during this period. Because one, it's encouraging a character of like, do I call laziness or deliberate using government money to run the business, knowing that when I'll be called upon, I can still pay the same principal amount without any penalties, and therefore they would want to retain the money in their business. Number 2, administratively, she also established that this particular law is used to even forgive principal amount, not only, that is the audit report. It is auditor's report. Probably I've seen Mwenda shaking his head, but it came out from, and it's on record, from the pronunciation of Auditor General of the Republic of Kenya, which is an independent office. And the report is tabled in this committee. And in case of anything, it can still be provided for your confirmation. That out of audit findings, there was some taxpayers who were forgiven out of this amnesty, including principal amount. She also found out that tax compliance certificates is issued to people who have not paid their principal amount when they are called upon when they need tax compliance certificate. So, and therefore, from our hand, what is the essence of us leading to this request to continue giving amnesty when it is abused? It's not bearing fruits, or there's no willingness to use this one to encourage. Who is this person deserving to be given this? Thank you. And probably, as I was requesting, the benefit of this from the history or from the previous exemptions or amnesty which has been given, whether it bears fruits. Thank you.
Okay, let me think. First, the work of the Auditor General is cut out in the Constitution. And she has a role to check on the actions carried out. So if there are actions carriers that actions carriers done which are not in conformity with the requirements of the law, then that is a matter that should be taken up. So we don't want to. I don't want to challenge what she has found. In fact, we support her because we want to ensure that refunds or any waivers are done as per requirements of the law. Number two is that we have, yes, there is a tendency to encourage what I would call moral hazard, where you have to wait for amnesty so that you pay lower taxes. That's why it's not our intention to perpetuate this for long. I think we had a big debate even when we were agreeing to put this time round. We had intended not to proceed, but we looked at the backlog and we saw that there's still a lot of cases under TAT within the High Court. There are quite a number, and we have been working very closely with the judiciary on this matter. So, and last year when we gave the amnesty, there was a good response. We managed almost 60 billion, which was good, and I think we sometimes even in areas like sugar sector or coffee sector, sometimes you give relief where you find that the chances of maybe recovery are low, and you encourage amnesty. So this amnesty we have asked this time round, but it is not our intention to have it like a permanent feature of a finance bill, because that creates a moral hazard.
Yes, and even
if I can add, sure. Chairman, I think you remember the last amnesty that that was brought through this committee and was approved in the last, I forget which act. We had restricted it. The time period, I think, was until December 2022. And then, you know, Chair, there has been a number of firms have come to and given feedback that it has been a difficult period. And we may have locked some of them before the impact. If you saw the non-performing loans, they are indicating of the challenges that businesses were going through. And sometimes, even without indicating, you look at the information and you see if taxpayers are saying we want to comply, but we have gone through some challenges. Chair, this can be considered in that context, that you know that the COVID impacts also had a time lag. So the full impact of some of those impacts.
Why don't they make the request for amnesty within the context of a legal process, not an individual tax collector?
Chairman, this is
because let me tell you, PS, we have different backgrounds here, and what the Auditor General said, which Honorable Ruto presented very well, is indeed a reality. In my other life, as a lawyer, I acted for big and small people. And I witnessed on the desk of a commissioner at KRA something, I will not give you his details or her details, but a guy who was to pay 1.2 billion, because of that waiver and amnesty provision, he has said to pay 580 million. That is the losing even the principle we are talking about. And you know, it may be easy for us to say, let auditor now pick this thing and deal with it separately. But there is also sanctity we want to give officers and the good faith we want to give them. What I'm seeing being avoided here are those legal provisions which are creating room for abuse and corrupt practices. And so if PS, you already agree that this thing should have a set side, it's an obligation of everybody to pay taxes. You don't pay in time, pay with the interests. Why do we accept a proposal to entrench waivers and amnesties in tax law when that obligation is on all citizens equally?
This is really addressing legacy issues, and also it's one-off. You can see it as a sunset clause. We were saying by June, and that's it. We have to come back again if we need to seek your concurrence that it should be put in law. So it's a balance.
So what is there that you are dealing with by that time? Because you cannot just request for this amnesty waiver provision up to June. What is it you want to deal with between now and that June?
You see, we have transitioned to the electronic platform, but we were in a manual system, and that the legacy issues of that transition is what we are trying to deal with.
Let me try to weigh in a bit, Honorable Kaluma. The KRA system has changed over the years, and there are some that in that change, some taxpayers have found they have penalties, and those penalties has yielded again interest, and we took away the power of the commissioner to waive those interest or those penalties. And therefore, this is to say that if we do not have principal tax up to this time, then those penalties and interest will be written off. And also, it also gives an advantage of KRA pursuing some collections that are not collectible. Because if I know it's not something I did, then I think because we have a session with KRA after this, it will be very important that we make it clear to them, let them use that time to clear their books, so that even as they seek to collect the taxes, then those cannot be collectible. They are removed from their books.
Yeah. You, Chair, I want to put it to you, and not even to KRA. What is the price or the cost of Kenya Revenue or the National Treasury collecting all this information on a periodical and submitting to National Assembly for proper motion, so that there could be very specific address than just to open a blanket? Remember, there was the issue we were following on tax holidays. There was those matters on unclarity. The reason why even we tightened the power from KRA on giving out waivers was because of the problems arising, some of them on this expressway. With that, how much does it cost to be collected and can be submitted through this committee, and we can have one motion, and the power can be given to KRA to address those specific, and to have an open-handed to be abused.
In addition, Chair, my worry, which is the last limb of my concern, is concentrating too much power in an individual as against a process like a judicial process.
I don't think
or a team, because when you are talking of KRA here, you are looking at it in terms of an institution.
But I think here we are saying we are giving the taxpayer amnesty. It's not KRA. It's the taxpayer being told, we have a window here for you to pay minus the interest. If you take advantage of this opportunity, you will not pay the penalty. That is not giving KRA the power.
No, please, sir. It is this power to give amnesty to an individual. That exercise of power is in who?
That exercise
in a commission.
Power, no, it's not.
It is a law.
It will be the National
Commissioner. Once you pass, and this law is signed by the president, then it becomes law. But the commissioner has no role.
Let me try to explain. The commissioner has no role at all in waiving interest and penalties. Not even the president. So the only entity that has power to waive interest and penalties is the National Assembly. And that is why there is proposal in the bill. And so if this committee agrees and convinces the House, then if a taxpayer pays their principal tax that was owed,
And I'm listening to Mwenda, my good friend. Mwenda is... Mwenda, sorry, Mwenda.
Mwenda is the other gentleman.
Mwenda, I need to declare interest. Mwenda, we worked with them during IPEC when I was having a CC finance sourcing issue. Listening to your case, you are isolating issues which are either historical, as we are putting it, which are known issues. There are known weighty issues that are before you and that you need to address. But the bill is speaking to general public taxpayers. So I would really wish us to be a bit clear so that as we retreat to make a conclusion of this. There are some specific cases that are before KRA and National Treasury, but they are looking for powers to address them because they are established to be uncollectible. PS has called them legacy issues, either system error issues, which has been generated by system, and they are not collectible. Are they specific as it is? And then can it be addressed like that? Because just doing a blanket like this, again, it may not be wrong for someone to evaluate our performance as revenue collector, that we seem not to be effective in our work, and therefore, when we are found in a corner, we rush to say, please, allow us a space to encourage. It also speaks to our efficiency. It speaks to our effectiveness. It speaks to our performance. Because as an audit or amnesty, it shows something somewhere is not happening. But with a tight system, effective and efficient system, we will have less cases on this. It will have less cases on this. And if there are system-generated issues, it can be addressed as specific issues. If the law doesn't allow, then we can use this platform only to address those ones and not general.
Yeah, if you look at, currently I think we have about 170 billion shillings which are in dispute. You know, they are going through dispute resolution mechanism. And these are candidates for a portion of that can be easily handled through this amnesty. And that's why we're saying if we give this chance, of course I agree with you, the concerns you're raising are legitimate. It's an issue of balance. Do we wait? We wait forever? Or we better take advantage of what we get? Like we got now about 60 billion, which has helped us to fill the gap that we have in our revenue system.
All right.
Chairman, can I add something? Sure, just one, because it's important. And there are two categories. There is what the PS has spoken to, what we are seeing through the dispute resolution mechanism, and it's indicative of the challenge. There are those who have not disclosed, and they have indicated that, there are those who have not, gone to the tribunal or to this dispute, but they have indicated willingness to settle, and there is evidence that they have obligations. But they have also cited the reasons why. Actually, there are cases, Chair, as we speak, of those who, if they are not supported in that way, they are already they are likely to go into liquidation because even their capital has been eaten into. So it is indicative of, and as I mentioned, Chair, even the NPLs, the increase of NPLs during the high interest, it was also indicative of problems. In fact, you also see an increase of cases of auction. There may be many factors, but one of them is also these issues of taxes, penalties, and arrears. So it's a combination of factors.
Yes. Lastly, is there any question that has?
Sorry, you may also find some of them are tied to the pending bills accumulated.
Wow.
And so companies are struggling because they have not been paid. It's not their fault.
Yeah, Chair, if you may permit.
Yes, sure.
Yeah, you see, I'm reading the text of the provision. It's actually Section 37E of the Tax Procedures Act. And the concentration of powers in the commissioner that I was talking about is indeed the position, not the law. Because, Chair, it says at subsection 1 that notwithstanding any other provisions of this Act, the commissioner shall refrain. So the law is granting the commissioner power not to act. You get what I'm talking about? I'm talking about power being concentrated in the commissioner to determine whether or not to waive or grant amnesty. If you go to subsection 2, it is still also the person from whom the tax is due shall apply to the commissioner. So the power to determine, or the discretion, if I were to call it so, in the commissioner, and then I'm saying I always have a problem with concentration of powers in an individual, but we leave it for committee.
Okay. Kindly allow Commissioner Rispa to respond.
I see what you did right there. You see the way Rispa has been handling the KRA matters, and because we have a different session with KRA, I was wondering myself, do we still need another session with KRA? Because we feel like we're talking to KRA.
Thank you, Chair. For the record, I'm actually National Treasury, just with understanding of KRA matters. Chair, just to clarify this issue of the tax amnesty, you see, previously, as actually the Chair had mentioned, there was a provision in the law that gave those powers of waiver of penalty and interest to the Commissioner. That was done away with, so it no longer exists. But then there are those taxpayers who genuinely, for various reasons, PS has said, pending bills not paid, and you see when you pay pending bills, you pay POA, you pay corporation tax, you pay all these things. So if a taxpayer has not been given that, then they will automatically default. And if they default, the system is wired in such a way that penalties will come in. So it's not a manual process. So there's no discretion there to start with. Now, when this was nullified, these provisions were nullified, there was need now to look at the whole spectrum, because taxpayers would come and apply to the commissioner. The law actually said the commissioner could waive to the extent of 1.5 million, but beyond that, commissioner makes a recommendation to Treasury. Now, you may get that waiver, you may not, regardless of whether your reasoning or justification is actually legit or strong. So then there was this need of bringing the amnesty. And so to address your specific point, as it is now, KRA has no power to waive penalties and interest. Yeah? That was brought back, but it was brought to the extent of only if it is system generated. I think there's such provision. So those are the ones of you did not pay in time, regardless of whether you have a reason, you are sick, you are out of the country, or someone passed, all those reasons, because there was a window for all that, as long as you make the justification. So the amnesty came in. Now, with the amnesty now, why we are saying it does not give KRA excessive powers is, when there is a principal amount, it is in the system. The demand has been made, so there are records in place. And with that principal amount, for as long as you don't pay, then it means interest continues to accrue, so you're not mitigating any interest. Interest continues to accrue, and of course the amount subject to the Induplam rule, which then limits it. Now, what are we doing? We're saying there are very many disputes all over the place, and there are taxpayers who genuinely want to pay, but they are not able to. Case in point, in the previous tax amnesty, there were two provisions. In fact, actually, the how, because the law said there will be the amnesty to cover this period, but it will be closed during this period. So it had an open and shut provision. So if there was no principal amount, then automatically the penalties and interest were waived. And that was communicated to the taxpayer. So you didn't have to make the application. If there is a principal amount, you either pay and then notify the commissioner that now I have paid, now waive. No questions asked, no justification. The principal is gone, it's waived. The third angle was you ask for a payment plan. But if we are saying that you should have paid the principal amount by 30th of June 2025, for example, your payment plan must then be fully settled. The amount, principal, must be fully settled as at that period when the amnesty window closes. So in those ones, then it's not automatic. So where is the principal amount is not automatic. You pay, you apply,
You give them automatically. You do the payment plan, you finish, you apply. But where there is no principal amount, then automatically it is waived. So, Chair, the point is, in that case scenario, then you see the Commission is not being given any power to decide whether or not to waive and the extent to which to waive. As long as the principal amount, which is in the system, it is documented in the communication, it is in the appeal process at the tribunal, at the High Court, that amount is known. So there is really no discretion there. Thank you, Chair.
So I thank her for the clarification, Chair. But I really liked in addressing my issue, you remember the recommendation of the Treasury that was in the earlier law.
Yeah, so let's make progress, Honorable Kaluma. Now that we took that power, it's when National Treasury would write to the Permanent Secretary for National Treasury was allowed to waive, and we had issues where KRA had said they don't say no, and then National Treasury do that. So let's check. Yes. Lastly, let's so that we conclude. PS, there has been always the argument that the projections we set in our projections are not factual, and they are not really factual, but they are way off, and that probably the models we use for the projections it gives us faulty figures, and that's why we always have a deficit at every political time, and of course that consequently gives us spending bills. And key point, I was looking at your yields, they just sampled just a few of them. I compared what you had, similar provisions you brought in 2025 and similar provisions that you brought in 2026, and the different yields that you are stating in your report. For example, transportation of sugarcane from farms to milling factories. Last year you told us you had projected a yield of 330 million. This year you said is that 399.3 million. For supply of local manufactured phones, it was 55 last year. This year you said it's 7.1. For supply of electric bicycles, last year you had it's 11 million. This year it's 13.2. For supply of solar and nuclear batteries, you had said it's 658 million. This year you said it's 829. For the supply of electric buses, you had said last year it was 735. This year is 889. Interestingly, the change of your yields projection from last year and this year is 20%. So it seems that someone just took the yields last year and just marked it up by 20%. And so, which is asking how realistic and how accurate are these yields that you're giving us? Because I know that's why we usually have a lot of back and forth. You tell us, no, this has this yield. But looking at your projections, you've just increased it by 20%. What is that 20% based on? And how can you have just a change of 20% across all these particular tax rates?
Maybe, Chair. So because this is conclusion, just asking from the general policy direction, where we know one of the critical area this regime and this administration is focusing on bottom-up economic transformation agenda, is enabling production, especially in food security, through subsidies. I've seen the budget statement read out by the Cabinet Secretary yesterday. They have provided subsidies almost to a tune of around 18 billion. And 2 billion for seeds, 18 for fertilizer. And now, the provisions on clause 31 on the finance bill, and you had some mention, and I'm a proponent of reducing tax expenditure, but it is touching on some elements that to me are similar to the focus on the policy direction, because exempting farm inputs definitely will increase the cost. And the objective and focus of the policy of the government is to lower cost of production so that you enhance production and address the food security of the country. Maybe mention something about that.
Respond to those two matters and we close from there.
Okay, so before I leave Mwenda to deal with the specifics of the yields, I just want to say one thing, that if you look at the projections in the budget for revenue, we have it's about 3.6 trillion. But for specifics on ordinary revenue, if you compare what was in the PPS and what we have now, there's a difference. And we have done a revision, first to make sure that we try and be as realistic as possible. Normally, of course, you have nominal GDP. The growth of nominal GDP that matters. But what we do also, apart from just using the general formula, we look back, like we had some revenue from central bank, about 30 billion, that came in as dividend. That cannot be factored for this year, because we don't know how the situation will be. So we net that. We net that from the base. And any other that don't look like they are realistic, so that what we leave in the base is actually what is realistic. So you'll find that what we have, the projections we have now are more realistic. And we are trying to also move away from that criticism that our targets have been too high. And we have tried as much as possible to align. But even then, even when we reduce, we don't also reduce too low, because we have to set the bar for KRA to work hard. On that note, I want to give...
So is it because you want to set the bar for them?
No, we have to be realistic, because there is no need to put a figure there that you end up missing.
And even closer home, in the appropriations, we've seen a change in allocation to counties by an addition, I think...
8 billion.
8 billion.
Yeah.
And I'm wondering, so how are we going to raise the additional...
This is the issue. I remember engaging the leadership of Parliament when we were negotiating, and ours was, we stood at 420. And we said that any additional amount to counties is debt. So you have to choose. If you want to give more money to counties, you know we have to borrow to give them. And it's I think the wisdom of the negotiating committee that they ended up with a 428. Ours was 420, because you will see that debt, particularly servicing of interest has gone up. And in fact, if you compare the last 10 years, you will see that now servicing cost of debt is taking up almost 49% of revenue, ordinary revenue. In fact, if you increase principal, then you'll just be collected from KRA to pay debt. So we thought we should be sensitive even to counties. If counties are also not working hard to raise all source revenue, and we are just relying on what KRA is raising, then I think we are focusing on a pot that is not growing, because most of it is going, we're using it to pay debt. So that question you have asked is legitimate. We have now 428, but unfortunately, debt. That's why you see we are talking about the 5.5%. We had to accommodate that additional expenditure. And I kept saying spending pressures. Counties want, ministries want, everybody wants, and yet now the stock of debt has piled up. So the interest servicing costs have also gone up. And it's a reality that we have to look at, where we have to balance revenues, expenditure, and debt. It's a trilemma.
Does that mean, Chair, and then there is still a fiscal space room that this negotiation was arrived at by pulling rooftop to the rooftop? There was a space at 4.8, because the estimate which was submitted to Parliament were rating 4.8 trillion. After negotiation, there is an aid which has been increased to counties.
You tried to we try to adjust. I need to check, but maybe you also have to look at, instead of additional expenditure, we look for where to cut. And there were areas we had to cut.
Because you mentioned debt. You made reference to increase in debt out of as a result of this negotiation.
No.
Then I wonder, did we...
I'm saying that the message we gave to Parliament is that if we must give an additional money to counties, you know that we don't have additional revenue. So we may have to either cut
or increase
or borrow.
All right.
Yes, that's my point.
Wenda,
I don't want
projections.
Chairman, on the issue of the estimates of the specific revenue measures, the database on revenue collection lies with the Kenya Revenue Authority. And for us to estimate this, we rely largely on the Kenya Revenue Authority. I think they have also come back to us and say that they need to strengthen their systems so that we also have direct access so that we have access and we have a real-time system. I think there is still a gap there. But as we speak, these estimations are based on the data we receive from KRA, and it is true. There may be movements in light of, in the direction that the PS has said. But in the absence of a similar database at the KRA, we do not have, we just have to rely then on the Kenya Revenue Authority on those numbers and maybe test them for reality. So the solution, Chair, is what Treasury has done to provide additional resources to KRA. They are working on 3 areas. One is a data-led intelligence system, which means they have to then have a system and then have Treasury to have access so that we share the data. As we speak, we rely on data that is downloaded by KRA to do our own simulation. I think the second point, Chair, on the estimate now on the broader macro, we have put in place a process of estimating that, and we engage again with the KRA before we finalize the numbers, and we have adjusted correctly to reflect. If you look at the projection this year, we have adjusted to remove the shortfall that we estimate at the end of the financial year, and we have also removed the one-offs revenues that we received to then project based on the measures that we have recommended. So the only way these measures, if there are significant changes, then it would mean we would have to, at some point, revisit those projections. But they are really based on, and they are really estimates subject to approval by Parliament of these measures. So on the database, Chair, on the estimates of the projections, yeah, we need to work with KRA to then ensure that we are working from the same database, but we are not yet there. Okay. I think there was an issue around, Chair, if I can take it, I think it was on sovereign wealth fund, and why are we recommending KRA? I think the thing I would like to note, KRA even currently collects certain other revenues because they have the competence and the systems and the human resource to guarantee the fiduciary, the safety of the resources and that the resources will be delivered intact. They collect road maintenance levy. They also collect for us the affordable housing levy, and these are significant resources which demonstrates their capacity and others. The idea, Chair, was to leverage the efficiency and the systems of the Kenya Revenue Authority to collect these revenues. And it may not be efficient to start isolating certain components. It's better to have the whole, and that was the basis of this recommendation, Chair, that these are collected by an authority that has been tested and is funded to do exactly that. And some of these collections would also be useful information for KRA in terms of validating whatever else they are doing.
The issue they were raising is separating. We have no issue with the royalties going to the sovereign wealth fund, but the fees, and they're saying the fees is what they actually use to first of all, to run the State Department. And number two, they are the ones who have the expertise in determining whatever, that space of mean resource. It's already my forte per se. And so KRA is not the regulator to, if you give that role to KRA, KRA is not the regulator on that particular sector. And we're giving us examples of like NEMA, if you give KRA the responsibility of